Good morning, everyone. Distinguished speakers, respected members, guests, and my dear friends, a very warm welcome to you all today. On behalf of the ICI Dubai chapter, it is my privilege to welcome you to today's technical session featuring two of the most significant topics that is driving the region today: the future of audit and IFRS 18, a new era of financial reporting. When I sit and wonder, we all know every family has this age-old grandmother, a great-grandmother. She's there. Children come and go, marriages happen, everything is there, but this great-grandmother in the house is there for years. Now, you must be thinking why I'm giving a reference of a grandmother today. Do you all don't think IFRS is like that great-grandmother? Yes or no? VAT came, updates came, corporate tax came, updates are still coming, AML is there, ESG is arrived, but what has not changed is that IFRS. That great-grandmother is still there, and that pendulum is still ticking every now and then. So it is still the backbone of the financial reporting model. It continues to evolve, but its purpose remains the same: to ensure transparency, comparability, and trust in the financial statements. And today, our that beloved grandmother has decided to surprise us once again with IFRS 18. She's not retiring anytime soon. She's simply updating the family rules. So with that, I welcome you all for today's technical session. Before moving on, I have to bring attention to two important points. One is the registration for WOFA. It's already open. We have shared the links. We are pleased requesting you and welcoming you to Visakhapatnam, where the WOFA will be held. So kindly register, and we'll all see you there. And the second most important update is we have the HR meet on the 28th of July. We have shared the circular, the links, everything has been shared to the members. Please, if we as chartered accountants don't support our fraternity, who else would do? We know what a chartered accountants can do in your companies. So we request all your HR to please fill up the form so that you can attend this event on the 28th of July. It is for HRs, or it is for the CXOs who are driving this region. It's going to only help another chartered accountant from the fraternity. I would request the technical team to please play the video.
What if one meeting could transform the way your organization hires chartered accountants? Imagine having access to India's most trusted pool of chartered accountant talent through a single, credible platform. The ICI HR CXO Meet in Dubai is more than just an event. It's a unique opportunity to connect, explore comprehensive hiring solutions for today's businesses.
Whether you're looking for freshly qualified chartered accountants, experienced finance professionals for leadership roles, overseas recruitment, and many more, ICI offers it all under one roof.
Engage directly with ICI leadership and industry experts. Share your hiring needs and understand future skills. Help shape the next generation of CAs.
Gain valuable learning from the experiences and best practices of leading organizations, exchange ideas with industry peers, and explore how advanced technologies and innovative recruitment strategies are transforming the way organizations attract and hire top finance talent.
Build partnerships and discover talent. Drive growth and innovation. Join us on 28th July in Dubai.
Thank you. Moving on. United by shared values and deep-rooted ties, the UAE and India, we stand together in friendship. I now request every member to rise for the national anthem. Technical team, could you please play the...
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रदब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Having closely witnessing his efforts, I can say he's constantly working behind the scene. His vision is what the members are seeing this year. See today's event. All the events that is organized under his vision and leadership is always timely. Whether you see the FCNR topic or you see this IFRS 18, he's always for current topics and affairs. And he chooses speakers also from the fraternity. Without taking much of your time, let us hear from our leader, Chairman CA Rishi Chawla. Please welcome him with a very big round of applause as he walks the stage.
Good morning, everyone. How's the Josh today? Hi. Only one person is saying hi. Where is everybody? How is the Josh? Hi. See, future of audit is here. Our experts are here. IFRS 18 is here. I think this is what the future looks like for us as chartered accountants. So I think we need to have a very high, energetic flow so that we can conquer these new things which are coming and hitting us, and we should lead as chartered accountants on this journey. So honorable our speakers of the day, CA Padmanabha Acharya ji, Mr. Paddy, we call him closely. Thank you, sir, for agreeing to be part of our session, especially taking the very important topic of future of audit. And let me also share with everybody that Paddy has personally helped me getting the idea conceptualized and also helping finding some really high standard speakers which we have today. Thank you, everybody. So please making out for us today. CA Firoz Ali, principal of KPMG. Hi, Firoz. Where are you? Hi, Firoz is here. Thank you, Firoz, for making it. He's going to cover IFRS 18. It's a very important topic. Thank you very much for agreeing to take up this topic. Our panelist of the day for Future of Audit, Mr. Talal Samad. Thank you for joining. He's the Associate Director Monitoring at ADGM from the regulator. Very important person. Thank you very much. And everybody is important for us, but I always appreciate you taking time for us. That's really special. Thank you very much. CA Shashank Khatri, my friend from EY. Shashank, where are you? Thank you for making it. Lovely to see you always. Thank you so much. Daya Bhai, all the way from India. He's been like a family to me. Bhai, thank you very much for making it. It's very special to see you. Our Central Council member, my favorite, among, a lot of seniors which we meet, and thank you very much for making it so lovely of you. James, sir, James, the best buddy is always any suggestion. Our former chairman is our guidance force, so you have always been a pillar for us. Thank you very much, James, for also agreeing to be part of this session. Our panelists for the IFRS 18, moderator CA Nitin. Nitin bhai, thank you very much for taking up this role, for being the moderator. Our panelist, Priju bhai, I think he was on the way, should be here anytime soon. And Naveed bhai, thank you very much for making it. We have worked in EY long time back, and good to see you up there, and thank you very much. When the regulator comes, it is very, very special. And being a friend and being at that position is really special. Thank you very much for making it. Manoj bhai, Manoj Khatod is there. He might be on the way. Yusuf sir, Yusuf bhai, thank you so much for making it for the day. That's really special. And our distinguished member, you are the most important people for us because we are, as a committee, as ICI Dubai chapter committee, our main purpose or target is always been bringing something unique, bringing something new for our members so they can learn and take that back home and excel in their life and their careers. Because as chartered accountants, we have to be, people look at us to show them the way. And it's very important for us to actually understand what's going on. So it's this topic, future of audit and IFRS 18, both are very, very, I would say, in the market topic for us as accountants. So I welcome you all to our event today. Our valued sponsors, without you, these kind of events are very difficult to do. Thank you very much for supporting us and keeping the belief in us. Respected former chairman, thank you for always being there as our guidance force. My vice chairman, Amit bhai, how are you? Thank you, always been a great support. My colleagues in the executive committee, good morning and a very warm welcome to all of you. All right, if someone asked us today, can artificial intelligence intelligence replace audit in the future? So some of the people might say maybe, maybe not. But I think the real question we should be asking is, can AI replace professional judgment, ethics, professional skepticism, and trust? For decades, our profession has evolved from hard manual files to digital files, and now is the era of artificial intelligence, which has come to air. However, the main purpose of the audit has remained the same, which is to build trust. This is where our profession, especially we all as chartered accountant, has an important role to play to build that trust among all the stakeholders, the investors who look at these numbers and make financial decisions. This is also true for financial reporting. This is IFRS 18 is welcome, Sir Aniket ji, Aniket Talati, Sunil Talati ji. Give them a big round of applause. Our former presidents are here with us. This is really special. Thank you so much, sir. And wishing you a very happy birthday, sir. Sunil ji, you have a birthday. You just celebrated birthday. Welcome, sir. Welcome to the ICI Dubai chapter. So IFRS 18 is one hallmark standard which has gone into removing the jargons and speak in the investor language. So it has gone into those technical things and come out with the language of the investor. So normally when we look at the financials, we think, okay, fine, this deferred asset, this, that, we see all those words, but not everybody understands those jargons. So IFRS 18 is going that one step forward to ensure the stakeholders or the investor actually understand and make those financial standards. So this standard particularly becomes very important for us also, because ultimately the goal of chartered accountants is to ensure the trust is built. At the same time, the people who read these standards understand what are they actually trying to say. So with that, I like to request, please, the technical team, put up the calendar in front of me. So this is the calendar for us in the coming weeks. So we are having the HR meet. Shalini ji, our regional office manager, is here. So we are organizing a HR meet. The idea of this HR meet is we call the HR people of the companies to come and talk to us, tell us how chartered accountants can help the organization in solving their financial issues or challenges which they face, and also to understand exactly from the HR people of the companies, like what are their observation or suggestions for chartered accountants. When they hire chartered accountants, what are their observations? So we as an organization also understand and train our chartered accountants in a proper way. So please, I highly encourage all the members to go back to your companies and ask your HR people to join in this HR meet, which is going to be very important for the hiring of chartered accountants. So this is for us. So please, I request humbly to make an effort on this. Then we are having AI Masterclass, which is from India, which is at the end of this month. And then we have certain focus group sessions. We have big event, family event, which is coming Independence Day and Onam celebration on 16th of August. Then there is a trip which we are going. Then we are doing a Shiv Khera session end of next month. And there is a corporate tax and e-invoicing session, which we are doing first week of September. So these are some of the highlight events. Next one, these are the big events which are going to plan in the coming year. So we have already spoken Independence Day. Then we are doing the job fair in September. We are having a big Diwali event. We're going to have an annual conference. Let me just share with the annual conference. This annual conference will not be a normal annual conference which we have every year. This year, we are going to have the ICI GCC conference. Can we have a big round of applause for Institute of Chartered Accountants of India? Reason being, they have trusted our chapter to host the first GCC conference. So I feel very obliged, CA Prasanna ji, for trusting us and giving this big responsibility. So this event is going to be a very big event. We are planning in the Expo City. So I look forward to see you all there. I look forward to your ideas, your suggestion, any speaker you think which can add that value to this conference. Do please share it, talk to me. We are happy as a committee. We are always there to take your ideas and put it into action. Then we have a sports tournament, International Women's Day. These are the major ones. Next one. So these are some of the initiatives which we have done. If you're not part of any of the initiative, please take a moment. We have a lot of, the boards outside where you can join those initiatives. We have Legacy Connect, 55 years plus. Then Youth Connect is there. Next one. Then we have Khaleej Tan discounted offer for our members. Make use of it because last few are left and it'll be over. Then we have a mentorship program, especially for the new chartered accountants, where our senior chartered accountants are helping the new chartered accountants when they get into this market. So please do take a moment and make use of this, this mentorship program. And for the newly chartered accountants, we have discounted the fees to 500. I highly encourage the newly chartered accountants to join the chapter. We have the fitness drive this year. We are doing a lot of initiative. We are planning one in the next month, which we maybe will be a marathon or something of that sort, but the fitness is very important. So we have got the job portal prepared. I encourage to find jobs for our chartered accountant, post it there, and help our own fraternity to find jobs in the market. Next one. So this is the our website. We have the knowledge base where ICI India has developed a lot of good programs. So all are hosted on our chapter website. So please do access. We have the CA GPTs also there. Make use of it. It's been wonderfully done. Next slide. So we have first time ever, we have got the Financials Time free offer for our members. So this is a 60-day free member offer. Please make use of it. It's a very unique one. Next one. So these are some of the 5 areas of recognition appreciation we as a chapter would like to do. Adding 5 members, I highly encourage you to please get new members to the chapter, introduce high-profile speaker, bring new ideas, share new ideas with us as committee, bring new sponsors, and also any people who are achieving very good, we want to recognize them. Next one. So I'd like to thank you for our members who have helped us to get speakers, get ideas or something. So the members are mentioned here. We want to recognize them for always been helping. We are going to do it shortly. Thank you for all your support. So our former presidents are there. In their presence, we are going to have recognized that. So thank you, sir. We've been very fortunate to have you here. So I'll end up with this note. Charles Darwin once said, "It's not the strongest of the species that survives, nor the most intelligent ones. It is the one that is most adaptable to change." That's pretty much true for audit with the advancement of AI and the need to tell it straight with the evolving financial complexities. Thank you very much. Back to you, Secretary Madam.
Every profession is built not only by standards and regulations, but by the vision, dedication, and leadership of individuals who devote themselves to strengthening the fraternity. CA Aniketji Talati has been guiding force in the profession, known for his dynamic leadership commitment towards the growth of chartered accountants and his continuous efforts towards creating greater opportunities for the CA fraternity. My memory with you, sir, is you had felicitated me as the ex-com in my first year. So that is my personal memory towards you. And since we have not just Aniket ji, but also Sunil ji with us, so we have to hear the wisdom of words from them. Sir, we kindly request you to please come on stage and give us a few words of wisdom today. Please give him a very big round of applause.
Well, thank you very much, Ashna ji, and such a pleasure to be in your midst this morning. As you would have noticed, we are not only ill-prepared, but ill-dressed for this occasion. Reason being, father and myself are here, along with the entire family, to celebrate his 75th birthday. So it's a special year. And he also happens to celebrate in this year his 50th year in practice and 50 years of marriage. So we said, might as well, combine the occasion and celebrate it all year. And that's what brought us. But I think the love for the profession is such that kuch na kuch coincidentally bhi ho hi jata hai. We were entering the hotel and we had a galaxy of past chairmen yesterday in Taj. And they spotted us. And then Rishi ji, our dear beloved chairperson, he immediately called me and he said, "Aap Dubai aaye और आपने हमें किसी को नहीं बताया." So we said, no, we were here on a personal visit. But thank you, Chairman sir, for inviting us. It's always a pleasure to be amongst members on a wonderful Saturday morning. I will be very brief, not eat into the time of the speakers or the content that they are going to speak about. But what a wonderful topic that you have kept, the great shift. Immediately my mind, when you read shift, went to the keyboard of a computer. And the next thought that I had in mind that I think is very important when you look at that shift is also the control, alter, delete. Because when you want to shift and move forward, you will also have to do a lot of control, alter, delete with all that we have learned in the past. We have with us a very important gentleman, a council member, a dear friend, who has done control, alter, delete for a lot of processes in the institute, Daya Nivas Sharma ji, and who is going to be speaking on the shift that we will have. So I will not thereby eat into any of your topic and content of the future of audit that you are going to speak about. But maybe I can give in 2 minutes my overview of future of the profession as I see it, because not just audit, I think everything that we have around us is going to change. I am still privileged to represent ICI at the IFAX, PAIB, and also on the CAPA, which is the Confederation of Asia Pacific Accountants. And let me tell you that technology is going to have a very, very profound impact, of course, on our profession. But also, in the same breath, let me tell you, it is not going to be a challenge. I come from a third-generation family of accountants. My grandfather was told that calculators are invented. CA ki koi kaam nahi hai, we don't need chartered accountants. We will do the totals ourselves. I think the work only increased. I think my father's generation, they were told you have computers now. And no more suspense account, no more tallying the trial balance. You don't need accountants. Everything will be done automatically. I think the work only increased. We have e-filing, faceless, and so much more. And similarly, I feel with AI, the opportunity is far more than the threat it possesses. But I think it requires the control, alter, delete in terms of how we have been working so far and adopting this. If I have to crystal gaze and tell you the future of the profession without getting into how audit will change, which we have some wonderful speakers who will talk about it, I definitely see that in the future, maybe 15, 20 years, or maybe we could pick 2047, which is where India visions itself 25 years hence. I definitely see in the profession more advisory work, then more audit, tax, or compliance work. I think we all have to embrace it. You're talking about IFRS 18. I think the work on IFRS 18 traditionally used to be audit and assurance. But today, the opportunity in implementation of IFRS 18, in challenges, opinions, queries of IFRS 18 will far outweigh the assurance part of it. Similarly, I think it may be in taxation that has come here. It may be corporate tax or VAT. Your advisory services, in my view, will far outweigh our compliance services. Similarly, if I had to crystal gaze and look at 2047, I have no doubt in my mind, though I see very fewer women here. The secretary, of course, Madam Ashna ji is a lady, but I am very clear looking at the statistics of the institute, looking at the statistics globally. By 2047, we will definitely have more women accountants in the profession than men. That is going to be also one future that I very clearly, distinctly see. It has already happened in Australia, in New Zealand, in various parts of the developed world. And in India, also we are seeing, Dayaji, more girls qualifying and passing the examination than boys. So maybe, yes, that is a future that I foresee. I also foresee that the profession is going to be truly global. There is work going on in terms of interportability of professional degrees. And I am sure that all of you here in Dubai, of course, some of you may have local registrations, some of you may have only carried your India qualification here. But as time goes forward, this brand CA India that all of us have tried to build over these years, I think is only going to get stronger, and the profession will only keep going international. So our work will no longer be restricted to the jurisdiction or geography that we belong to, but will truly be global. And what better example than IFRS 18? As you look to implement it here, we have the same implementation that will happen in India. The Schedule 13, the revised Schedule 2 in the new Act, all of that has to go away. And what will now come in is a new presentation and disclosure format. And this is the big change that we all have to understand. We are no longer going to place items in a format of financial statements, that this comes to revenue operations, this comes to other expenses. We've all been accustomed to making that happen in terms of having an opportunity to, or a compulsion to put items into a fixed format. But I think IFRS 18 truly makes that shift and asks us to see numbers not where they should fit, but where the user will understand them better. And I think if you look at the entire new set of financial formats that have been coming out, huge change from IFRS 1 to IFRS 18, but breaking items into operating, financing, and investing. What we used to do for our cash flows is now coming into how we describe and present our financial statements. And the reason for this is that the world today is moving not from information that can be understood just by accountants, but information must flow in a manner that can be understood by the common man, the investor, the shareholder, the average Joe walking down the street. And therefore, I think we all must also reimagine the profession, make this shift, and I'm glad that the chapter is organizing this event, but also control, alter, delete some of our old ways of doing things, embrace the new, and I'm sure we will all have a phenomenal professional journey ahead. As I conclude, I once again thank the chapter for inviting me, and I urge and request all of you participate wholeheartedly, of course, in this first ever GCC conference. Dayaji and myself had tried to do this a few years ago. We couldn't get it through the council, but I'm delighted now that the institute is organizing different international conferences. One was held for the European region. They're organizing one for North, one for the ASEAN, and of course for GCC. What better place than Dubai, the best chapter, I think, that we have in not just the Middle East, but entire country. And as you all attend these conferences, always feel and believe that I am the I in ICAI. शुरुआत भी आपसे, अंत भी आपसे, इंस्टीट्यूट भी आप, इंडिया भी आप. Thank you.
Thank you so much, sir. Yes, शुरुआत भी हमसे, अंत भी हमसे, यही होना चाहिए. And with that, we have Sunil ji with us, who's celebrating his 75th birthday. So 75 years of wisdom, and you don't share some thoughts with us, is not done. So we please need some Guru Gyan today from you as well. So Thank you, sir. Please give him a very big round of applause.
Chairman, Mr. Rishi Chawla, and the entire team of Dubai chapter, all the honorable past chairman of Dubai chapter, and my dear professional brothers and sisters. Let me tell you, it's not only my pleasure today. I feel I'm privileged, I'm lucky, I'm blessed, and I'm honored that yesterday we were spotted and today we got the golden opportunity to meet all my learned chartered accountants here in Dubai chapter. The topic today is of future. Aniket talked about the future, but at 75, let me tell you, I enjoy talking the history and the past. And let me tell you, I got elected in 2000 January, and there was a conference here in Dubai. I was a vice chairman of PD committee. Chairman was Mr. Daga. 2 days before his arrival, he felt sick, and President asked me to come to Dubai. And that's how I could get the opportunity of coming to Dubai and Dubai chapter. And there, in that education minister, some lady was there. And she was always asking, what is the different in the chartered accountant compared to others? And I just, in my lecture, I said, we are really different. A simple question was asked to a doctor, to an engineer, to a lawyer, and a chartered accountant. What is 1 + 1? Or what is 1 and 1? The doctor said 1 and 1 is 2. Engineer said 1 and 1, it's 11. The lawyer was asked. Lawyer in his own style said, well, it depends on facts and circumstances of the case. It could be 2, it could be 11. Then the question came to CA. Yes, Mr. CA, what is 1 and 11? And CA said, how many you want? In those years, there were no accounting standards, no auditing standards. We were in a position to prepare the balance sheet as the client wanted. But the times have changed now. We have accounting standards, we have strict auditing standards, and above all, our great code of ethics. And after 2 years, believe me, I was again invited. Some education minister was there, who we continued for almost 10 years. Mr. G.R. Mehta was there at that time, chairman. And again, I was invited. And during the session, I was told how a chartered accountant is different than from the other professionals. And said, we are always best, we are not different. So tell me how. A person like Elon Musk wanted to appoint a CEO in India. So he flew from USA to India, had an interview in Oberoi at Nariman Point. Hundreds of applications were invited. Various brilliant professionals applied. Scrutiny, level 1, level 2, all were interviewed. Finally, 3 people were selected. One was an MBA. As you all know, they have their own level of thinking. Another was doctor, and the third was obviously chartered accountant. So the 8% of the USA started asking him various questions. And all of them answered so fantastically, he was confused whom to select. So he thought, let me ask a practical question. He said, okay, gentlemen, I'm appointing you and giving you a brand new convertible 2-seater Mercedes on the date of appointment. You are driving your car, 2-seater convertible from this Nariman Point to Marine Drive. And suddenly it rains heavily. And the bus stop, you see 3 people waving and asking for your help. One is your very good friend who really helped you to reach at this stage. The other one was an old lady who needed immediate hospitalization. The third was a beautiful girl to whom you were always looking at. She was never looking at you. And now she's asking for your lift. Whom would you give the lift? The MBA said, obviously, sir, today whatever I am is because of my friend. So I'll give the first lift to my friend. The doctor said, well, mine is most noble profession. I would certainly give immediate to the old lady and take her to the hospital. Then came the reply of chartered accountant. He said, sir, it's very simple. I'll get down from the car. I'll give the key to my friend, ask him to take the lady to the hospital and see me tomorrow in the morning at my house in coffee. And me and that girlfriend will go hand in hand in the Marine Drive. That is the chartered accountant. That is the difference. And that difference we see today even in the institute. People ask, what is better, ACCA, CPA, So many other courses, options, comparisons. But let me tell you, east or west, India is even today best. And for that matter, ICI is also the best. Supreme Court of India, in its judgment, they said that if anyone in the world wants to understand, know, and implement the exam system, they must learn it from ICAI. That is our standard. That's the strictest standard of education, of training. And let me complete with the importance of training. These three persons, the doctor, the lawyer, and chartered accountant, they came to Dubai and they were driving Lamborghini in full speed. And then they banged. They didn't see the bulb. All three of them died. All of them in the suit, as you all are, went to heaven. Said, we are the most noble professional. We have to have entry in the heaven. The Chitragupta said, wait, let me check your records. So first he checked the records of doctor. Oh, you forgot the Caesar in the stomach. Oh, instead of left brain, you operated the right brain. Oh, you took so much commission from the sale of the medicines. Oh, you referred to the pathology, though it was not required. 10 serious default, 10 minor defaults, 10 years in the hell, and then we'll shift it to the heaven. So as you please. Then came the turn of lawyer. Oh, Mr. Lawyer, bogus affidavit, creating false evidences in the court. Twice you bribed judge. So many, 10 serious defaults, 10 minor defaults, 10 years in hell. Then I'll shift it to the heaven. Then came the most noble professional chartered accountant. His record also unfortunately said, oh, you accepted the audit without sending no objection. Oh, you signed the 3CD report, though there were no books. Oh, not a single auditing standard and accounting standard observed. Oh, you didn't check the bank reconciliation. 10 serious defaults, 10 minor. 7 years in hell, and then I'll shift it to the heaven. Lawyer objected, Your Honor, 10 years to me, 10 years to doctor. Why 7 years to him? He said, he has done 3 years article on the earth. That is the standard of our institute. That is the biggest pride that we all should take. That yes, when we are articles, we are trained and trained so nicely that wherever we go, whether we have money or not, the moment you say, yes, I am a chartered accountant, it makes the difference, friends. And I'm really happy. When I was here in 2000, there were hardly 1,200 chartered accountants on record. And totally, I was saying 2,500 to 3,000. And there were hardly 20 chapters across the world. Now you see so many chapters, every single chapter doing better than the other. Mr. Chairman, no false praise. I am complimenting you. First time in my 75 years and 50 years of practice, I'm seeing a chapter chairman having the program of the entire year. A vision like Mr. Modi. A vision like our Prime Minister, Mr. Modi. Don't think of tomorrow. Think of 2030. Think of 2047. I am 75. I'm now thinking I'll come here when I'm 95. Hope you all meet me. And therefore, friend, let me end by saying what I used to write in my article. And you must have this feeling always in your heart. I adore my profession. I respect my counsel. I salute my institute. And I'm proud to be a chartered accountant, friends. Thank you. Thank you so much.
Thank you so much, sir. With that, I call the chairman, vice chairman to please give us, all the committee members, please join quickly.
Feel so privileged.
Good morning, everyone. What a great start. Refreshing your articleship journey. Now let me take an opportunity to shift the gear. I'm taking the word shift from here. A small story about the gratitude. This morning, I just had a brief discussion with our next speaker. You have seen the mentorship program, what the chairman just spoke about it. What he remembers is that 20 years back, someone see him in something, brought him to Dubai, and today he's leading the Deloitte. He's none other than our own member, Srinivas sir. So that's what he still remembers about you. So I'm talking about a mentorship program, that's how it can make an impact on your professional journey. So please make use of it. So friends, we are living a journey where there are a lot of automation, digital analytics happening around the world. In the times of such a rapid changes, we look for a guidance from a leader who are not only witnessing the future, but also actively shaping it. It's my distinct honor to introduce CA Padmana Acharya, Chairman of Deloitte Middle East, who also lead Deloitte audit practice in the UAE and serves on the Deloitte EMEA board. With over 30 years of distinguished experience in assurance and advisory services, much of it in Middle East, he has advised leading organizations across industries, including oil and gas, manufacturing, and telecommunication. Fellow member of our own fraternity, ICI, Cost Accountant of India, and CPA USA. There is a beautiful Sanskrit saying, Acharya Devo Bhava. The teacher is worthy of highest respect. Today we are privileged to welcome an Acharya, not just by name, but by reputation, someone who has inspired professional, mentor leaders, and helped shape the future of the audit profession. So ladies and gentlemen, please join me in giving a warm ICI Dubai chapter welcome to CA Acharya as he shares insight on the future of audit. A bigger round of applause for him, please.
Thank you very much for your kind introduction. CA Sunil Talati ji, CA Aniket ji, it's really remarkable to see two past presidents in any event, and that too a father and son duo. In my generation, this is probably the first time. CA Rishi, thank you for giving me this opportunity. You've worked very well behind the scenes to assemble this, wonderful lineup of speakers today. CA Asta, committee members in Dubai, all the ExCom members, the galaxy of past chairmen who are present here, speakers and members. At the outset, let me recognize someone here who is the past chairman of our Abu Dhabi chapter, CA Srinivas Acharya. They, while introducing me, it was mentioned that around 29 years ago, Srinivas Acharya identified me somewhere in India. I did pass my CA, I got 42nd rank, and he said, you should be here in the Middle East, and I know some people in Deloitte. He made that introduction, and that's why I'm here. I'm eternally grateful for that opportunity which he had given at that point in time. A number of things which I'm going to speak today are going to link back to some things which Aniket ji has mentioned, Sunil ji has mentioned, Rishi, you've mentioned as well. So at the outset, let us go to Mahabharata. Okay? Now we have Dhritarashtra, and the traditional way where people were looking at information during the war was someone would go to the battlefield, go and get that information, which will be typically a little bit old because it's after the event. Now, Dhritarashtra wanted live, continuous information. So God gave Sanjaya something called Divya Drishti. Okay? What is Divya Drishti? He is able to see the events as they unfold. He knows the intentions of the people who are there in the war, and he is able to communicate real-time information to Dhritarashtra in terms of what's happening in the war. Okay? Now, linking it back to our future of audit, AI is going to do that for external auditors. They'll give you real-time information, will help you in terms of a continuous audit process. And there is a tremendous shift as far as our profession is concerned, and that's what we'll be covering as far as the future of audit is concerned. By a show of hands, can I know how many of you are already exposed to AI in your organizations? I want to also understand how many of you here are from the profession, as in you are practicing chartered accountants. Okay, so roughly maybe 40% of the audience and roughly maybe 80-85% of you are already, dealing with AI in some form or the other. It's important because we can't be just exposed to a situation where we are not aware of those developments. Rishi mentioned in his keynote address that the audit as such, the expectations of audit has not changed. Okay? However, the way audits are going to be delivered is changing. So that's precisely my first slide. When I see the audit profession, what are the fundamental shifts which we are seeing? We are seeing the adoption of technology. Okay? If you are an audit firm, you need to embrace to new technologies. Our clients are adopting AI as far as their processes are concerned. So one of the first things is the awareness of what artificial intelligence is, upskilling our people in terms of those skill sets, understanding what areas of an organization is impacted due to AI, and as an auditor, how would he or she test it? This is one of the fundamental things. Recently, I attended a very interesting conference in Barcelona, and the speaker talked about one of his books, What Will My Children Do in the Future? What would they study in the future? And this is a question as parents we constantly ask. By the time our children read something and come out, is that relevant in the marketplace? When we employ people from the marketplace, are they ready as far as AI is concerned? Is our curriculum updated? This is a fundamental question. And as a parent, we always worry, by the time our children finish their education, is what they are doing going to be relevant in the future? Mainly due to the adoption of AI. And of course, as firms, we are all facing that burden of investment. Okay? As clients, of course, many of our clients are looking for reduction in terms of our fees. They're saying AI is going to reduce the number of hours of your audit, so you should be charging us lesser. Thank you. However, as far as the firms are concerned, they need to invest. So a significant dollar amount, so billions of dollars are being spent by professional services firms as far as investing in AI are concerned. We have amongst us two very senior regulators in this audience. We have Talal from ADGM, we have Naveed from DFSA. As regulators, their expectations go up every year. Audit quality is on top of their mind, and they're highly interested to see what the firms are doing as far as AI is concerned. Having said that, we also have data residency considerations in our country. In Abu Dhabi, for instance, audit working papers cannot be stored outside the Emirate of Abu Dhabi. And a number of things as far as AI is concerned, they are cloud-based, and it's a significant investment. So later on in the panel discussion, of course, we'll be speaking to our panelists, and this is a question which we're going to ask in terms of expectations of regulators. And when I look at regulations, PCAOB has come up with regulations on AI and usage of AI in audits. The Institute of Internal Auditors, they've issued a publication, a 31-page publication on the use of AI in internal audit. You also have other professional bodies, including those in the EU who have issued standards. And the IAASB has also commented in IAS 315 revised around the use of AI. And everyone has pinpointed to one thing: professional judgment and accountability rests with the auditor. You cannot delegate this to AI. So ultimately, the external auditors are responsible for the implementation of AI, but the accountability as far as the audit itself is concerned is with the professional auditor. And UAE, it's extremely interesting to see what the developments are as far as AI is concerned. There are a number of entities which are investing in AI, and we are at the forefront of the AI revolution. Really, we all need to ponder and take a step back to see, how does the future look like? And later on in our panel discussion, we will be covering multiple elements in terms of the future of audit, the impact of artificial intelligence, data analytics, investments required by firms in terms of AI, private equity, and the shape of the audit profession in terms of how private equity investments are going is another area to look at. So let me just take you through the various steps and the 5 forces shaping the future of audit. The first one is technology transformation. Anything which is repetitive and systematic can be, replaced. Humans can be replaced with technology. And that's where your analytics, your AI automation, and digital platforms come into place. There is a significant disruption as far as workforce is concerned. Now, when I see the UAE, previously, let's say if a company was hiring 50 fresh graduates, there have been 2 significant shifts. One is we all have nationalization, emeritization. We have a 2% emeritization. So as far as fresh graduates are concerned, a large portion of those fresh graduates are now Emirati workforce because you need to add 2% to your workforce every year. The second shift which we are seeing is that AI is freeing up the hours which are typically done by the young associate. So due to that, you're seeing that if a firm needed 50 associates, you don't need 50 associates now. Maybe you need 30 associates. So as a direct impact of this, you will find that expatriate graduates who are in the UAE, they're finding it extremely challenging to secure jobs. So this is a familiar story. And you need to really start thinking about this. Previously, we are all familiar with something called the diamond shape the pyramid shape as far as the profession is concerned. Now that is moving into a diamond shape. So you need less people at the bottom, less people at the top, probably more in the middle. That's the significant shift as far as workforce is concerned. Of course, from a client expectation perspective, all of our clients, they want high quality audits. They want it done faster. They also want it done in a more timely fashion. And they also want this done more efficiently with lesser fees. So there is a lot of pressure as far as clients are concerned. And we also covered what regulators are expecting from their perspective as well. There has to be an ethical use of AI. We need to ensure that there's no bias as far as your sampling is concerned. And ultimately, the firm is responsible for its ultimate output and professional judgment. Last but not the least, if you see market, there is consolidation happening as far as players are concerned. There is also the impact of private equity. About 1,000 professional services firms have taken some help or the other in terms of private equity. And if I look at the large firms, both Baker Tilly and Grant Thornton, they have had significant investments come to them through the private equity route, which from a market participant perspective and from a regulatory perspective, there's an interesting debate around the shape of the profession and audit quality. Again, this is something which we will explore during our panel discussion. So if I see Abu Dhabi, if I see UAE and the number of entities which are investing in artificial intelligence, at the forefront, you have the MBZ, Mohammed bin Zayed Institute of AI. You have entities like Presight, G42, investing heavily. UAE wants to be at the forefront of artificial intelligence. You have, when you look at the adoption of AI in entities, certain risks which come out of it. The first stage is to understand, what are those processes which AI is taking over. And then as an auditor, the next question is that, how do I test this now? If part of the process, the client has taken up agentic AI, as far as the general public is concerned, there is a question around trust. Do I trust this? And what work the external auditor has done to get comfort as far as this is concerned. And as I said, ultimately, all the professional standards and regulations are saying that, look, irrespective of what happens, we want to hold the external auditor responsible for that professional judgment and the overall conclusion. That aspect has not changed, okay? One of the previous speakers mentioned that he expects, I think it was Aniket who said that despite the calculator, despite the computer, you expect the jobs to grow. The World Economic Forum expects AI to create 170 million jobs by 2030. So the expectation is that more jobs will be created. However, I must caveat it. The traditional jobs will be replaced, and it is expected that the people who are there need to get those kind of skill sets. So curriculum is quite important, and later during our panel discussion, we will touch base with Dayaji on what the institute is doing. So let me just summarize for you, what AI can do, okay? Right now, today, because is it hype or is it a reality? If I go today and ask Deloitte to do an audit, what are the things which you can expect AI to do? So I'm talking about things which are already in place. So you will be hearing about agentic AI adoption in external audit by the large professional services firms. And ultimately, what is the art of the possible, okay? So one, you have tools which summarize information, okay? By that, what do I mean is, you have contracts. Let's say you are a construction company and you have a contract, and you have hundreds of contracts. It is possible for AI to take those contracts, and what is the auditor ultimately interested in? The auditor is interested in a contract start date, contract stop date, variation, liquidated damages, and any non-standard provisions in a particular contract. AI is able to take these large contracts and summarize this for you instantaneously, and create also a working paper for you for that, giving you back with a hyperlink if you want to know from where it is extracted. This is pretty useful as far as summarization of documents are concerned. Contracts is one example, but typically, maybe there are board minutes, there are internal audit reports. So AI summary is very useful. Instead of spending hours summarizing it, the software is able to do this. The second thing is something called a research assistant, okay? Now, the client has a complex accounting question, and I'm seeing Yusuf Hassan here because he's a master at complex accounting. Now, most of the firms have professional services literature, which is their Q&A book. They also have access to professional standards. So if you type in a particular scenario and a situation, AI will give you the initial response saying, this could be the answer. Of course, you can't take it for granted. You need to do your own research, but it helps you sifting through a lot of literature, and it helps you come up with, this is what is supposed to be the accounting position. Maybe someone is also looking at testing a particular account balance, and there's a new associate, he does not know how to test cash. You go to the research assistant and say, I want to test cash balance. This is my materiality. This is the population. Please advise me. It will give you a series of procedures what to do. If you give it information, even it can put things in terms of a workflow for you and give that information, and this is readily available. You have another tool, which is basically a review assistant. Imagine you have a working paper, and you want the initial review to be done by AI on your behalf and come up with review notes. That facility today exists, wherein it can look at a working paper and give you a set of review notes for the team to fix. In fact, we encourage our people to do this before it comes for manager or partner review. You have something called a data snipper. What does this do? It takes your financial statements, it foots your financial statements, it checks the cross-references. Maybe 2 hours of manual work per financial statement can be saved by using the data snipper function. And one more interesting thing. You have data extraction, data testing done by artificial intelligence. What does this mean? Let's say I want to do a 3-way match test, and I want to create a work paper, and I also want to identify where there are differences between the recorded population and the evidence which I am gathering. AI has the ability to extract data from the client system and take the samples to the extent that has been already provided to it in the form of PDF documents, extract those cells which are the target for it, compare it with recorded population, put this in a work paper, throw up the exceptions, giving hyperlink to where the problem is. So all this was being done by a young associate. It will do that for you. So these are things which is not something which is going to come up in the future. I'm saying these things are already available to some of the professional services firms today, and these have been implemented. With a caveat, if you are a government entity resident in the Emirate of Abu Dhabi, you can't, because some of this data goes to the cloud and comes back. It's purged, but there is still some clarity required with regulators whether data can go outside the Emirate or not. So I'm just giving you some examples of the art of the possible. More things are coming, as far as professional services firms are concerned. The challenge is, if you are not investing, then you will be left behind. So this is something which is very, very important, which is why collective investment is quite important. As a firm, you need to invest together. I'm a little bit conscious of time because we have a panel, and one of our speakers needs to leave to the airport by 11 o'clock. So I'll try to wrap up quickly. A number of skill sets are required. I've listed them, the emotional skills to the technical skills. And as an organization, if you have a lot of people, you need to ensure that they are upskilled. You need to ensure that they have the necessary level of understanding of AI and train them as far as the new tools are concerned. So just thinking here, I know James is here. He's chairman of one of the audit committees for Aster subsidiary. And as chairman of audit committee, you probably may be thinking, what should I do as an audit committee around AI? The first thing is, the awareness of AI within the organization. You need to ensure that there is knowledge of AI, not only at the operational level, but also at the governance level. We spoke about the skill sets, so we have to ensure that the board members and the audit committee members have the necessary skill sets to evaluate AI usage in the organization. We earlier spoke about the different types of biases which are possible, the ethical use of AI. We also spoke about any particular bias as far as your sampling is concerned or as far as your data is concerned. So that's something which they need to get comfort around. And they also need to have that conversation with the executive and management around what's the adoption of AI in the organization and what are the controls which are there and how the internal audit as well as the external audit can give them comfort around AI in the organization. So these are some important considerations for the audit committees, and we will further explore this during our panel discussion. And this is my final slide. So ultimately, when you're looking at the future of audit, the question is, how, as a firm, will you invest? We are all entrepreneurial in terms of what we do. If you leave our people, they will try and find their own solution. For large organizations, it's important to ensure that the investment is coming from a central place and it's only invested once. Imagine you have a subsidiary, they are also developing a tool, you are developing the same tool. It's a waste of resources. To ensure that as an organization, you have an investment strategy and you invest in one place. And as a professional services firm, the model of the professional services firm is that people come, they stay for a certain period of time, they retire, and then people from within grow to the next level. So professional services firm, you have to balance the short-term profitability with the long-term in terms of this. AI investments are large, and the impact of this would be over a longer term. You need to adapt as a firm. If you don't adapt, you will perish. And the worry is basically the large firms have the resources. When it comes to the medium-sized firms and the smaller firms, AI requires a lot of investment, whether they have the necessary investments. But at the same time, they have the agility to act faster than the larger firms. So you have a trade-off here in terms of how they could move. And ultimately, it's around the governance of AI as well. How would you govern AI? Make sure that you have a strong tone at the top and at the board level around the usage of AI. And lastly, it's about collaboration. Not just the firms itself. It's about one firm collaborating with the other. It's the firms collaborating with the regulators, as well as people like the institute, to ensure that the research, investment is done at one place can benefit the entire profession. So with this, I conclude my presentation, and we are ready for our panel discussion. And I would like to welcome my panelists one by one. At the outset,
Before that, we have to give you the momentum.
No, we'll do it at the end. We will do it at the end, after everyone. Thank you. I'm just conscious of Talal's time. So Talal, a dear friend with whom I've worked in ADGM for a number of years, he's recently been promoted in his organization, someone who I highly respect from Abu Dhabi Global Markets. Please come on stage. I would also like to welcome CA Daya Nivas Sharma, a member of our Central Council. His father was a contemporary of my father, and really a very well-respected firm in Hyderabad. And I had the recent opportunity to see him as well in Hyderabad. A round of applause for Daya. One of my contemporaries, someone who grew together in professional services with me, past chairman of Dubai chapter CA James Matthew, managing partner and CEO of UHY James. And last but not the least, a professional colleague who I've recently met, Shashank Khatri. Shashank from Ernst & Young, Middle East. So thank you, gentlemen, for first of all agreeing to come on this panel discussion. Now, I'll just start the question, and this is a question to everyone in the audience. Just looking at the discussion which has happened so far, and there is a significant shift as far as technology is concerned, workforce is concerned, client expectations are concerned. What do you think will define the future of audit as far as UAE is concerned in terms of your own firms in the next 3 to 5 years? Maybe we'll start with you, Shashank.
Thank you. Firstly, good morning, everyone. I hope I'm audible. It's a pleasure being here today. And I must admit, I'm not a regular to the CA chapter events, but every time I come in and see the energy, you start to rethink about the choices you've made in the past few years. So hopefully I'll be here more often going forward. It's a nice question, Paddy. I think this has been the hot topic that all of us have been discussing over the last, say, year and a half now. And if I have to look at what are the key 3 shapers that would essentially move the audit profession over the next 3 to 5 years, I'll categorize them into 1, technology. Second is going to be the extensive use of data. And the last one is going to be the broader expectation from the stakeholders in terms of the quality of audit that we would deliver. Now, if I have to talk about, say, the technology, it's no longer going to be, and like you had mentioned earlier as well, It's no longer going to be restricted to just getting details around the standard tasks that we are using AI for. But the agentic AI that we would start seeing in the future is something where you would use AI more often for aspects around risk planning, the risk mitigation, risk assessment. So it's going to be much more involved. But what that essentially does is it frees up the time of the audit teams to focus on more judgmental and complex areas. So it's not that it's going to replace what we essentially do, but it frees up our tasks to focus on more meatier aspects of audit. Data has always been there, at least for the last 5 years. I've been working on the audits. We've used data extensively. It's only going to go further and further. In fact, perhaps sampling-based audit is going to be the audit of the past. What's going to be mattered in the future is going to be how well you correlate data, what's the anomalies that you identify, and then it's going to be a much more targeted-driven audit approach that you would see in the future. And what that essentially does is that you get the technology, you get the data, the expectations from all stakeholders, whether it's the shareholders, whether it's the financial institutions or the regulators, is going to be providing a high-quality audit. So if I have to sum it up, it's going to be human-led, technology-enabled audits going forward, and that's perhaps the order of the day.
Thank you. Human-led, technology-enabled audit, and sampling is something of the past. Getting comfort on 100% of the population is something of the future. James, appreciate your views.
Good morning, everyone. I'm a little bit embarrassed to sit in between two regulators on the left side, and my right side, the big boys here on the big four. And then I'm on having another regulator sitting right in front of me. So I'll be very mindful of what I'm speaking about today. So I will also try and bring in, as you've rightly put in, I chair the audit committee of one of the largest healthcare group in India, listed in India. So what we see from auditors, what sort of expectations as auditors we expect from them. And incidentally, we had the call yesterday evening with Paddy and all the panelists, and I was speaking with the auditor, one of the partners of the auditor. I don't want to name which the company is doing the audit. So I said, the last 6 years you've been doing the audit. So what sort of shift in the number of people which you deploy for the audit? So I think he was suspecting that I'm trying to negotiate on the fees. So he was trying to say it in a different way. To take it from what Khatri said, I think a lot of sampling, technology-related things coming in, you will see a lot of shift from there happening. But the judgment part, what you have rightly put in, this is not something which we are going to automate, and that's not going to happen. As long as the trust is there, or as long as the investors are there, or stakeholders are there, the trust is going to be there. That's going to be the cornerstone of our profession. So that is not something which can automate. And so I feel that maybe there could be a shift in a little bit of area where we've been doing, as you put in on the research, all of those things can help you out, but moving forward, and incidentally, I was just seeing the audit monitoring report, which has come out from DFSA and ADGM as well. And by the way, I put both of them in ChatGPT and then said, what are the common things came? Most of the things were common, I would say. So at the end of the day, what regulators expect, I think professional skepticism, the judgment, the way you challenge the assumptions, these are things which will be going to be there. Thank you.
Thank you. And exactly what the PCOB has mentioned and the UK FRC has mentioned, which James has stressed, is that as far as professional judgment is concerned, this is the responsibility of the external auditor, despite whatever is happening in AI. There, you are in a very unique position. You are both a practitioner as well as part of our institute in the Central Council. So I would love to hear your perspective on both fronts.
Yeah, Paddy, thank you. And see, I was fortunate to be the founding chairman of AI in ICI committee. And I can proudly say that, training 50,000 chartered accountants across the globe has been the most unique position which I carried on my shoulder, and very happy with it. I deserve a round of applause though. See, I don't know how many of you have read the book 0 to 1. Anyone read the book here, 0 to 1?
There are two of them.
So technically, if you have not read, then I think for me the story of AI is over. I'm sorry. I have a total different view. Because AI has been created now. Now it's only going to improvise over a period of time. Now what is, as a chartered accountant, we need to understand is, this AI, from where the data is coming in. Have you thought about it? Every regulator in the world has ensured the capturing of data from no other persons from the professional chartered accountant or CPA. Every return, every information when you talk about, the data is getting processed. Who are the people who are processing data? We are the people who are processing the data. And this data which is getting processed is being used differently every time to analyze, assess, and reassess certain facts. So as a chartered accountant, what you need to understand is what data is there in the system and how do you process the data, what is the risk attached to it. Today, even today, after so many years, we are talking about AI as an important tool, but for me, just for you to tell, I am fortunately the chairman of Digital Accounting and Assurance Board. We have moved ahead of many institutes in the world, whether it is a CPA, whether it is ACCA, whether it is any institute, IIA, or anyone, because we are come out with the world's first information system audit standards, which is now going to be launched. I'm going to talk about it in detail going forward. And can you think that the standard talks about, there's a standard which talks about how do you audit AI? Which institute has done it? If anyone knows, kindly let me know. This is the only institute which has come out with it. Just imagine when you talk about the systems, the processes, and most importantly, the integration of laws which are happening across the globe. I'm not talking about India alone or Dubai alone, but globally, the integration of laws, whether you talk from an external affairs ministry, where you talk about the tax authorities, when you talk about VAT authorities, when you talk about Companies Act, when you talk about regulatory framework, anywhere, just sit back and visualize at 360 degree the kind of data integration which is happening and the data universe which is getting created. This is where we need to understand it is not about how to use AI, but how to audit AI should be our vision to think from a larger perspective.
Thank you, Daya. Thank you, Daya. Very, very interesting. And I should commend Daya and the Institute for the investment they have done in terms of digital audits in India. Really, it's path-breaking. And I have seen the literature of what is being issued by FRC, by PCOB, IASB, and the work which ICI has done is really commendable.
Thank you.
So we now come to our regulators here in our marketplace. So would love to hear from Talal the regulatory perspective in terms of the future of audit.
Thank you, Paddy. And thank you to the ICAI, to Chairman Rishi. Good morning, everyone. So before I comment on this, I'm speaking in my personal capacity, and the views that I express are my own and not necessarily of the ADGM or the Registration Authority. Sonny, it's important to put that out there. Okay. Agree with everything. That's some very important points. But I want to shed a bit more light from a regulator perspective. Now, I see this as a very, very strong opportunity looking ahead. ADGM in particular is going through phenomenal growth. Just to give you an idea, 5 years ago, we had about 3,000 entities licensed in ADGM. Today, that number is more than 14,000. And you will all have seen, thank you. Early in 24, the federal cabinet passed a resolution expanding the scope of ADGM, and the island adjacent to Al Reem Island, that was added to our jurisdiction. Now, coming back to audit, we as the commercial regulator for the jurisdiction, we see audit and auditors playing a very, very critical gatekeeper role. With the future of audit, AI coming into it, we see this as a huge opportunity and a better method for auditors to show how important it is the role that they carry out. Because there'll be less time spending on detailed testing perhaps, more challenging management, more looking at, as you were saying, contracts, complicated areas, and more kind of moving away from sample testing to continuous monitoring, for instance, as well as being able to show more collaboration with the regulator. Because audit is, we do what we do to protect the public interest, to protect investors, to protect stakeholders. All of that, I think, should really, really improve with the future of the implementation of AI across the audit profession.
Thank you, Talal. And as a segue to that, I have a second question on workforce planning. Earlier during my discussion, I had pointed out that we are moving away from the pyramid to the diamond shape. As well, it's estimated that probably at that associate level, maybe around 50% of the work done by that associate can be done by AI. So I just wanted to get your views around workforce planning as to how you're seeing your subject entities approaching it and the impact on the profession.
Okay, so the total population of audit firms in ADGM, again, to give everyone a little bit of context, 5 years ago, it was 16 audit firms we had. Now, the number is just shy of 60.
60.
60 audit firms registered in our jurisdiction. And why are we seeing such a massive increase? Because the business is increasing. The demand for auditors is increasing. But also keep in mind, audit firms are multidisciplinary firms. They will provide accounting, bookkeeping, tax compliance, tax advisory services, and of course, not to mention the consultancy. So coming back to your specific point about workforce, it is adapting. It is growing quite a bit because as the commercial regulator, we also are seeing the visas and the work permits. The workforce in ADGM is skyrocketing. So I think they're responding in a way that meets the requirements of the business that's put forward to them.
Thank you, Talal. And Daya, you must be seeing new student registration at the institute, which forms part of our population to recruit. How are you seeing? Are more people coming into as students? Are more chartered accountants going out of the system? And looking at the future of audit and workforce planning, what are the implications from your perspective?
See, the answer is very simple. I just made my statement earlier that we train close to 50,000 chartered accountants, hands-on. I'm not talking about a virtual class or a pre-recorded class. It's basically a classroom training, which is hands-on. We train 50,000 people. That means the kind of demand which is there is going high. Now, parallelly, when you talk about the students, just for, I don't know how many of you are aware, the new syllabus of ICAI actually has every chapter, as a last chapter, use of technology in financial reporting, use of technology in tax compliances, use of technology in corporate law, use of technology in audit. So just imagine the syllabus has already moved towards a direction where every chapter has been added. We had a separate, subject itself to write examination, but was no relevance with the respective topics or subjects as such. But now that has been incorporated in every subject, every vertical in detail. Now just tell you, very simple. I don't know how many of you are aware, we have close to 36,000 chartered accountants who have qualified information system audits. 36,000, and close to 17,000 chartered accountants who have qualified forensic. Now just imagine what is the difference between then and now is going to be. Earlier it was more of a classroom learning, but now the information system audit standards which we are talking about, so DISA, which is equivalent to CISA, no institute or no profession in the world actually gives you a practical hands-on training. If I am permitted, I want to play one small video of a minute.
Yes, please.
Can I request the office to play this video? This is a very interesting one. I want you to really think from the perspective what the topic is going to be discussed here. It's all about the ICAI, nothing to do about me.
The world has changed. Businesses are digital, frauds are digital, risks are digital, and assurance must become digital too. Regulators today demand far more than traditional audits. Cybersecurity, digital trust, data privacy, technology risk, tech governance, resilience. The future requires a new generation of professionals. For over 7 decades, ICAI has strengthened trust, governance, and transparency. And now, ICAI is redefining the future of digital assurance. DISA transformed information systems audit in India. More than 36,000 chartered accountants became technology assurance professionals. But the world evolved. Now, the next evolution. Introducing DISA 4.0, a future-ready framework for digital trust and technology assurance. Built for the new era of cybersecurity, cloud, cyber, data protection, and emerging technologies. Designed with practical learning, hands-on labs, real-world case studies, cyber audit simulations, SOC walkthroughs, and regulator-aligned frameworks. Aligned with global benchmarks, mapped to modern regulatory expectations, powered by ICAI's Information Systems Audit Standards. DISA 4.0 is globally benchmarked, locally relevant, and future-focused. The future of assurance is here. DISA 4.0, shaping the next generation of digital trust leaders.
You are asking what institute is moving? Get me another institute which is close to us in delivering what we are promising. And just to tell you, friends, is like, day before yesterday, or last 3 days rather, we have changed the entire curriculum of DISA. And for the first time, we are thankful to the council that it gave a permission to create its own data analytics, forensics, cybersecurity lab, which we are going to make in Hyderabad, Center of Excellence, where it is going to be hands-on training with all the tools and technology which is available. And the beauty is this is not going to be used only for the purpose of training. This is the first time we are coming out with a model which is pay and use model. Mean you have an engagement, don't invest on technology till the time you have confidence, come to the institute, use the tools, technologies, and be ready, and then start delivering. Once you have the confidence, start delivering. So this is what is actually happening in India. When you talk about forensics, similarly, we are actually working. See, today we are talking about technology alone. Technology alone is not something which is going to be relevant. Please understand. It has to have a face or touch of forensic also. Because the technology, the kind of cyber crimes which are happening, you can't even imagine. You're talking about AI continuously on use. But the kind of risk which is attached to it, are we auditing? Are we even thinking about auditing that? Is something which is very critical, and that is where Institute is coming up with the new courses. And just for you, just a very quick one, DISA 4.0 is going to be the new gen chartered accountants who are going to be trained. It's 16 hours of e-learning, 2 days of immersive learning, 8 days of classroom learning. Can you just imagine? Similarly, we are talking about DISA Plus, which is people who have completed DISA, they have to redo the entire course. We are introducing a concept of 10 hours of mandatory CP for all the DISA holders, for mandatory CP for forensic guys. We are getting the certification. We already got the certification for DPDP. We trained people. We are already now getting 3 days of certification course for cybersecurity for chartered accountants. Just imagine. So these are all the new things which ICI is already moved with. So now I think this is sufficient for us to...
Then absolutely, in terms of the future of workforce, ICI is really investing in terms of its curriculum, and thank you for sharing the video. James.
So I think CA Aniket Talati said, controlled, alt and delete. I think this is where a lot of learning, unlearning, relearning is happening. If you look around for the Institute of our own chapter, I think you got an upcoming session coming for a 3-day masterclass on AI. So, I mean, when you ask somebody, how many of you are using AI, I think around 80% of the people raise their hands, right? So I think this is no option for us to move. There will be, slightly there would be some, I think, job losses at the lower end, but that's not scaring me. But I would take a minute and say, Mohammed Allabar, everybody knows, I guess, he is, chairman of MR Properties and one of the most liquid companies in the Middle East. I think they carry around $14-15 billion of cash. and $5 billion of profit they make every year. And they said in the last 3 years, he hasn't hired a single person in Emaar. And he also said that Noon is going to cut down his workforce by 50% in the next few years' time. This is the scariest part. I don't know. I will ask, Paddy this question. What do you think about it?
Well, I mean, the view in some of the large professional services firm is to improve the metric revenue per employee. This happens two ways. One is increase the revenue itself. Second is the denominator is the number of employees. So there is expectation that the number of employees will either stay flat or go down. And that has its impact on workforce planning. And really, you have that dilemma as a professional services firm, because over the years, all of them have employed a number of fresh graduates, trained a number of people in workforce. And given the advent of AI, you're seeing, if you look at all of the large professional services firm, the number of people they are hiring, it's more or less, it's replacement hiring. And the fresh graduates, they're finding it extremely difficult to gain entry due to what I described earlier. And maybe you can share some insight, Shashank, in terms of workforce planning in EY.
The one interesting aspect that I've started to notice about that, about the overall workforce planning, has been the sudden interest that the Gen Zs have started to show in the profession. So over the years, the standard audit tend to be a bit more mundane in terms of what you're doing. So the interest started to drop. But interestingly, Gen Zs, for example, are the first native AI users. That's the first generation of native AI users. So now with AI getting integrated into audit, I've started to see them show a lot more interest in the work. So I feel it's only an opportunity for people to grow and upscale themselves rather than actually losing out on jobs.
Thank you. I will ask Talal a question because he has to depart. In the UAE, we have multiple regulators. We have the FSA, we have ADGM, we have the central bank, we have the AAA, and we also have Abu Dhabi Accountability Authority, amongst others. And as professional services firms, and you saw 40% of the audience is professional services firms here, they are required to comply with regulations of multiple regulators. Now, what does the future of regulation look like? And whereas we've seen certain bodies come together and sign MOUs, for example, to test firms or look at ISQM 1, in your view, what else can be done? Many of you are members of IFR. What can we do in terms of streamlining regulations for the audit profession in the UAE?
Very, very good question. And I think the CMA is also very important and yes, upcoming. I mean, yeah, doing a lot in this space. Now, I'll speak from ADGM's perspective. We regularly reach out and collaborate with other regulators, including the DFSA. Naveed and I are very close friends, but also very good professional collaborators as well. Our respective organizations are both members of the International Forum of Independent Audit Regulators. There are only about 56 or 57 members across the globe. In terms of collaboration in the UAE, I know the DFSA has done quite a bit. We are also moving in that direction where we are looking to have more MOUs with other regulators so that we can see where our regulatory efforts can be combined, or there could be more collaboration. But I do want to say that the collaboration will, even if it does happen looking ahead, it will be more around how firms are operating in terms of their whole firm procedures, how the practices are managed and run, how their systems of controls work. But the underlying entities that they audit or they act for in terms of their professional services, that will still have to, the competent authority will still be where that particular entity is domiciled. So an ADGM entity, for instance, might be audited by an audit firm that is registered and licensed in several different jurisdictions, has different regulators playing, or different regulators that are in the mix. But ultimately, it will all link back to the client that it's operating or acting for, and where that entity is domiciled. Does that, would you like me to add some more or anything?
You've answered like a regulator,
Yeah.
but we'll take that. Yeah, thank you. And maybe, Naveed, maybe we can pick your brain on this as well. So
yeah, I'm sure you will.
I want to make use of the presence of DFSA as well. And I believe you've signed an MOU, so you may be able to shed some further light in terms of what you plan to do.
Sure, thank you. I'm on the next panel on IFRS 18, but let's talk about the future of audit, topic very close to my heart. So DFSA, Capital Markets Authority.
Naveed, come sit here, because I need to leave in 2 minutes anyway.
No, it's all right.
Seriously?
No, it's okay. No, it's okay. Thank you so much. So Capital Markets Authority and Ministry of Economy, which grants the audit licenses in the entire UAE, we signed a MOU and we started a joint ISQM inspection. And the idea is that we will be covering 97% of the capital markets through joint inspections. The inspections have already started, and hopefully by mid of next year, we will cover the 97% of the capital market to give a confidence that the system of quality management is working in the UAE. Yes, we are a fragmented economy when it comes to the regulators and the respective mandates, but we are working very closely. And Talal's now point of that ADGM is looking to sign more MOUs. Hopefully we will see ADGM on this side as well to complete the full regulatory cycle. Inspection of independent file or engagement files are reducing globally. PCOB has announced that they will be looking at more of the firm-wide procedures. More regulators have started, but it's not going away. So we will continue to focus on our independent or individual engagement files, which are significantly important, and so as ADGM is doing it. But the key is the respective work together and aligning. And as you mentioned, Paddy, earlier, there is significant investment required in technology. If regulators would come together, the amount of money has been invested by a professional services firm in billions. None of the regulators can individually match that number. So we have to work collectively, and that's why it's very important at the government level. So in Dubai, the Dubai Economic Security Council is working a lot to bring all the regulators together in terms of the cybersecurity, the cloud migrations, etc. In Dubai, we have a Dubai Digital Authority. The mandate of that authority is to bring every single regulator, financial, non-financial, Dubai Health Authority, RTA, into one single portal. So when you go to Dubai Digital Authority with one click, you get the entire statistics of the Emirate of Dubai. So regulators are already working on cross-border as well, and hopefully we will be able to reduce this fragmentation for the future of audit.
Thank you, Naveed. And if ADGM signs a MOU with DFSA, CA Rishi and the chapter will take some credit.
Yeah,
Thank you.
Absolutely.
One point, Paddy, I just want to add from a regulatory perspective and Government of India perspective. You know, when you're talking about the firms investing, however large they are, but just to keep you posted, like, you know, I don't know the number to be converted into dollars, 6 lakh crores is the budget of Government of India on Digital India Initiative. How much? $54 billion. Wow. Just imagine. We have already invested into it. And the best part is the kind of data integration which is happening, the departmental integration which is happening, which was never there earlier, is actually coming in a total different zone altogether. Paddy, the problem is not that the government is getting stronger in the process, but the problem is the chartered accountants are not getting stronger in the process because you do not have the access of this data. As a regulator, when you guys are sitting on the other side of the table, you have 10 questions to ask because you have access of data. How do you expect a chartered accountant who is signing on the other side will have that access data? If the government of India or UAE or whichever government you talk about is not going to give that information to the chartered accountants who are auditing that organization, tell me how complete are you to do an audit? So somewhere we all as a professional have to stand up together and tell the government, look, it is not only for the purpose of you using the data, but when we are given authority to audit, you also have to provide that access to us. That is one point.
Thank you, Daya. And
can I just add one more thing? Last thing. Further to what Naveed said, want to highlight this point that the ICAI members are very, very active in ADGM, and you're a very, very strong part of our professional community. In terms of how our jurisdiction operates, we are the commercial regulator for the entire jurisdiction. So audit is just one cohort or one facet of the supervision that we do. And it's important to highlight this because as auditors, we expect you all, or even as accountants, when you're in our jurisdiction, to be the gatekeepers, to facilitate business, to protect stakeholders. And the point about inspections, we, I think, as the regulators, we will carry on looking at underlying files. And I think in terms of the future, it will move more towards targeted reviews as well, because we get intelligence, we get referrals, or we get some sort of data about a particular entity in our jurisdiction. Immediately, one of the first point of contacts that we think about are the audit firms, because of the access to information and the important role auditors and accountants play. So keep that in mind, please, because we do lots of full on-site assessments where we're looking at the underlying files, but we also do lots of targeted inspections. And we can't do that without you guys all being a very, very important part of our community and as gatekeepers.
So what Talal is saying, if you have a modification of opinion, going concern issues, reputational issues with a client, it should surely be picked by the regulators for inspection. So thank you very much, Talal.
Thank you
and
so
I
much.
know you have a flight to catch, so we will bid adieu to you now. Can I request Rishi and Asta to come on stage along with Vice Chairman to give a memento to you before you depart?
Thank you so much. Thank you, everyone.
Nash. So Shashank, in terms of AI, earlier we spoke about what is the art of possible today. So perhaps you can give some more insights from you around, what today can be done from a professional services firm in terms of testing through AI.
So again, I would like to break this down into 3 specific segments. The first is essentially going to be around where are we using AI at this point in time, which is like you had mentioned, you had given a plethora of solutions that we currently offer. But what's going to be interesting is what is it going to be used for perhaps in the next 3 to 5 years? And that's where it gets interesting. It's going to be more interesting from the aspect that you would start using this for benchmarking. Say, for example, you know a particular industry that you've been auditing, but how confident are you that you've adopted all the procedures that would have actually needed to be implied? And that's where you start getting the AI to start giving you insights as to have you performed right procedures? Are there certain additional procedures very typical and tailored to the industry that you should have applied? And that's the kind of highlights and the risk planning that I was talking of earlier. But the third aspect is going to be what are those that do not go on to the AI, and that's the professional judgment, the key estimations, the going concerns of the world, the test of impairments, valuations. These would continue to remain core and fundamental to the audit professional judgment. The independence and objectivity is going to be core. So that's the way I look at the entire AI life cycle into what's there, what's for the future, and what does not go out.
Thank you. James, have there been any conversations from your clients to you on audit fees and AI? And what's your response if someone says, because of AI, you need to reduce your professional services fees? Give some tips to some of our members in the audience.
So I think...
and it's a two-way street. There are members in industry as well who are looking for your answers.
Yeah. So, yes, the general feeling is that a lot of savings in the way you do your audit. But I think that is not going to be the real reason. It is your expectation from the auditors have gone up. I'll talk from an audit committee chair, or when we look at auditors, we expect them to be continuously monitoring things, not just an assurance of their financial statements. We just need them to be giving an assurance to the committee that everything is going well, be it cyber, be it, so long as there is no conflict, so long as there is no compromise on the independence, we would want the auditors to be adding value. So a good CFO who runs, who is preparing the books of accounts, I don't think, even if the Big Four or a second-tier, mid-tier firm is doing the audit, the numbers are not going to change, right? Because all your Ifrs, everything, applicability is there. But what is that you're bringing on the table as an auditor? That matters. So going forward, the expectation level from the clients are going up. I think it gets offset by the fee part, which they talk about. They understand that part. That's what I would say, put it up that way.
So you're looking at delivering value for what you're doing and bringing in insights through AI.
Because traditionally might be spending a lot of our time in collecting data and analyzing that one, maybe lesser part of our time we are spending. But now it's going to be the other way around. The time what we spend to collect those data, interpretation time, actually we are able to do more on that, and that's where we can add value. And one more thing I wanted to just, the elephant in the room is the quality of the data. Because whatever you're going to do with the data, if, assuming a company which has got multiple ERPs, some part of the task are done in manual, how are you going to get that automation from all this data? Because it's not going to be that easy. And I've seen in some of the Indian companies, and some of the banks also, they are following continuous monitoring of controls, CCM, which they call it. And because if anything goes wrong, they are able to see what is happening. You don't have to necessarily wait for a quarter end, for a year end to come back and see what exactly has gone wrong in a procurement, what has gone wrong in a, some other, processes. So I think this is what I would just say on here.
Thank you. Earlier I spoke about private equity investment in audit firms. About 1,000 audit firms have received direct, indirect support from private equity houses. And, when we joined the profession, it was more around this generational aspect that you bring the firm in a position better than how you joined and pass it on to the next generation. With the PE entry into the audit firms, what is happening is that people are encashing what has been given to them, and this is being done under the pretext of the investment required to cope up with the future of audits. So we have largely seen this in the US, in the UK, and also certain parts of the Middle East. So you have notably Baker Tilly as well as Grant Thornton, and this is in public domain, so have received significant investment from private equity houses. So as the institute and as regulators, what's your perspective on this direction of travel of PE involvement in audit?
I'll answer this question, but I just have one question for the audience here. How many of you heard, I'm continuing with James' discussion, how many of you heard the concept of autonomous audit? Anyone here in this audience? One, only one. My request is just open the Google, type what is autonomous audit, and you'll get to know more about it, right? Which is what we have done for the biggest regulator of the country, C&AG. We gave them an idea of how autonomous audit can work. So this is done by ICI, by no other firm or any other consultant as such. So that is one thing, because people now have to understand where we are heading towards in the profession, because the future is there, not what we are talking at this point in time. There's a lot of complexity which is involved. Now, when you talk about this private equity, now, see, ICI as a body has been, I'll not say conservative, but have been very focused on holding the ethics at the strongest level. and I'm fortunate that I'm the vice chairman of Ethical Standard Board. So I have a lot of access to the data with regards to this new things which are happening. Now, what did ICI do is primarily with regards to the investment you're talking about, 75% of the firms are proprietary concerns in India, unfortunately, and I think across the globe that's the same percentage which is there. So ICI has thought about a concept called aggregation of CA firms. I don't know how many of you were aware. Yeah. Aggregation of CA firms has been initiated. Now, number one, that is basically with regards to mergers. Number two, we have created a concept called networking firms, right? Networking firms mean people have certain compliances that need to be done. There is an alliance model, there is a network model. In that also there are 2 stages. We have given step-by-step process. First, a live-in relationship, then the engagement, and then the marriage, which is a merger, technically. That is aggregation. So these are the 3 stages which ICI has put it in a very simple term, if you ask. Now, why is that? Is primarily because ICI is very clear that we do not want people to get influenced with the private equity coming in. Because this is a practice profession, it is not a business. We all have to understand this is a profession which an individual brain works and we deliver. Technology adoption, yes, you need to invest in that. You have banks for giving advancing loans, and the partners individually cannot do it. That's the reason this networking as well as the aggregation of CA firm model has been introduced. Now, there was one more discussion which is coming from the government of India was, why not you allow, or what is your thought, not allow, what is your thought on getting private equity into the firms? At that stage, Institute has decided 2 parts that divide the assurance and non-assurance function separate. And in non-assurance function, if they want to do it, let them do what they want. But in assurance function, you cannot get any private equity. Just imagine, because example, in my firm, there is a private equity investing. And today what will happen is it's going to influence a lot of such decisions which I am doing with various clients of mine, or maybe, unfortunately, the fact is all the private equity venture capital funds are insisting that these are the firms that need to audit. You, my clients. Yes. Now tell me, is it right? The fundamental of audit profession itself is questioned now. The independence is completely lost. So technically when you talk, so I'm not going to give a conclusive answer, but yes, the fact is ICI is working towards networking model. We are working towards aggregation of CA firms. We are talking about mergers. We are talking about dividing the CA practice into assurance and non-assurance function. And in non-assurance function, yes, you will be allowed to, make it right, whatever you say. Parallelly, Institute is the only institute in the world. I'm proud to say that I'm a chartered accountant from Institute of Chartered Accountants of India, because this is the only institute which is investing its own people and technology. We are trying to get the best of the best technology available for our chartered accountants, even if they are individuals to practice. That is where the gap is.
Thank you. Thank you, everyone. We have come to the conclusion of our panel discussion. Really great insights from our wonderful panelists. I would like all of you to give a round of applause.
Thank you so much. Wonderful insights, I would say. The session has given thoughts as well as the authorities' thoughts as well, what we are driving the region. Thank you so much. I would now like to invite our chairman, vice chairman, Vijay Bhai, Sanjay Bhai, and our partner, Elan, please, to felicitate our moderator and panelists. Have you seen these ice cream lollies today? Yes, they have been generously given us by our partner, Elan, cooling down our members, the AI in Elan.
Okay.
Finally, most awaited session, the IFRS 18. Our grandmother always had this storytelling style. She knew she detailed the matter, which chapters needed the most attention, and how every story had a clear beginning, middle, and the ending. The IFRS 18 is doing something very similar for financial statements, helping businesses tell their financial story in a more structured and meaningful way. So as our accounting grandmother opens yet another new chapter, let us hear from the expert who can decode this story for us. It is my pleasure to invite CA Firoz Ali today here to share his thoughts. But to formally introduce him, I would like to invite our executive committee, CA Dikshit Jain, to formally introduce him. Please welcome him with a round of applause.
Good morning, everyone. Can I have a louder good morning? Good morning. Thank you. Only my committee is saying good morning. Good morning, everyone. Okay, wonderful. So today's session, in the morning, I'm sure everybody enjoyed the breakfast. The session on future of audit reminds me, Kabir Das ji reminds me that one doha, it says, "Bura jo dekhan main chala, bura na milya koi. Jo dil khoja aap na, mujhse bura na koi." So it exactly matches with our audit profession, where audit is not about finding the faults of others, but it's about finding the truth, seeking the truth. And when I want to go and seek the truth in an entity, in an organization, the first thing I need to do is that first I have to be honest with myself. I have to have that integrity, and that's all about it. So that's why first I have to evaluate myself. So today's session is all about that. And today we have one of the very, very profound speaker who is going to talk about the changes and the new things which has come in IFRS 18, Mr. Firoz Ali Ghadiali. Now to introduce him, he has more than 24 years of experience across the Middle East, working as a principal in KPMG Lower Gulf. He has been a professor, he has been teaching, he has been a DPP, where he has been working with the audit committees and audit teams of the KPMG, where they are helping them to implement the IFRS. So he has an extensive experience on how this IFRS is implemented, how it works, and he is going to give us a very, very detailed insight on IFRS 18 today. So without taking much of your time, much of the time of the audience, I would like to call Mr. Firoz Ali Ghadiali on the stage with a thunderous round of applause, please. Mr. Firoz Ali. Thank you. Thank you so much.
Thank you. Good morning, members. Perfect. Before I start my session, I want to just discuss one of the funniest conversation I had with one of my CFO friend. So we were actually playing badminton in Danube, and I asked him, "Have you done assessment of IFRS 18? And he says, "Absolutely." And being a consultant, I got disappointed. I said, "Oh, I missed the bus." Then I asked him, "What are your findings? What you got it?" And the answer he gave me, he said, "We had a meeting with all our finance professions, treasury, and we discussed for half an hour. We had a coffee. And then we decided, let's wait for 2027 for auditors to come." Jokes apart, IFRS 18 is not just standard for auditors. This is a standard for finance professions, this is a standard for treasury, and this is a standard for ERP implementation team as well. And once I finish my session, I'm sure you will agree on this. With show of hand, I just wanted to understand in the audience, how many of you know IFRS 18? At least hear the name IFRS 18? All of you? And how many of you has studied IFRS 18 or done some training on IFRS 18? Few of them? Now last question, how many of you has planned and implement IFRS 18? Lucky to see there are some hands are there. My objective of today is to make sure when you go in your office on Monday, you at least think through, let us open and understand, is there anything for us in IFRS 18? With that, just one disclaimer. Whatever I'm saying here, it is all my individual statements, nothing to do with organization in which I work. Plus, this is more for training based on facts and circumstances which are been taken care. If you have some different facts and circumstances, that has to be analyzed, and hence this should not be quoted for your audit purpose. Okay, before we start, if you can just scan this and let me know which one of this do you think will impact due to IFRS 18? Everyone managed to open Mentimeters? Wow, we have 170 people who is logged in on Mentimeter. Okay, we got 136 responses, and I'm really appreciating the response which I see here. And it shows that we are here in this room who are chartered accountants, and they understand the impact of IFRS 18. So yes, if you can move to this. Can you move to the slides, please? So yes, IFRS 18 actually impacts not just the financial statements, it impacts your chart of accounts. It is going to impact your ERP systems. It will actually also impact your controls, and I'm going to discuss that in detail. And board reports and budgetary process as well. So although you may think controls and board reportings and budgetary has nothing to do with IFRS 18, but it has an impact. Let us see that in this session. Can we just have another polling? How prepared is your organizations or your clients, if you're a consultant, on IFRS 18? I can see in the room there are some CFOs of my friend CFO waiting for the auditors. So we have pretty large people actually think through that we're going to implement or start in 2027. Yeah, most probably because they think that this standard is going to be effective from 1st Jan 2027, and hence they might be thinking about it. But I'm very happy to see that there are people who are actually planned for 2027 and not just waiting for the auditors. With that, can you move to the slides, please? Let me start and explain you what is there in IFRS 18. And those who has not even done any training or opened their books to see what is IFRS 18, this 45 minutes will help you to understand a bit of IFRS 18. So first thing is, what are the issues and the changes? To make the financial statement more consistent, the IFRS 18 has been implemented. And the IFRS 18, if you see, the standard is actually given more, we can say, the systematic way of, or a structured way of showing your income statement. And that will create more comparability of your financial statements for the investors as well, to understand different companies. If they are evaluating, they will have a structured numbers to see in this IFRS. Now, one good thing is, the structure has 5 categories, right? And we'll see those 5 categories in the next slides. And that category is actually creating a challenge as well, that what you need to show where. So good thing about IFRS is, it is not going to change your numbers. It is only going to change how you present your numbers in the financial statement, right? So that is one of the thing where people will start thinking, okay, fine, it's not changing my bottom number, but please understand there are internal breakdowns which basically will change, and it will impact the way management or the board are looking at your numbers. Then the second thing is, a one subtotal has been added, which is operating profit. So don't get confused with operating profit and gross profit. Operating profit includes your admin expenses as well, and the other things we're going to talk about that. And one different thing this has been introduced, which was never there in IS 1, is non-GAAP measures. Yeah, MPA. We'll go and talk about that in detail later on. I'll keep that suspense. And the most important critical, which is actually going to create a lot of companies to think through, is on the aggregation and disaggregation. Right? Aggregation is still better. You just have your trial balance, you can still merge together, but disaggregation is actually creating a challenges for most of the companies, which I see. So what's the impact? As I mentioned, the companies are looking at IFRS 18 as an opportunity for shift, alt, delete. This is the mantra for today. So companies are not just thinking through that, okay, fine, we'll just implement IFRS 18, but there are a lot of baggages, right, in the financial statement they are carrying for years. Now this is the right time you see what is actually required by IFRS and what's information which you can actually cut and remove and delete, right? So this is going to be more of storytelling for your investors. And the face of income statement will going to change, and you will need lots of additional disclosure notes as well because of IFRS 18. So what next for you? IFRS 18, as I mentioned, effective date is 1st Jan 2027. But you need to have retrospective implication as well, or you have to apply from retrospective from 2026. So your comparative numbers of 2026 also has to be changed. And that is one of the reasons a lot of large corporates and the groups are worried about. Right? And then we'll discuss that more in the next slides. So what you need to do is, first thing first is do an assessment. Sit together, don't just have a half an hour coffee. Please have a discussion with your team to assess whether IFRS 18 is really impacting us or not. Second is communicate the impact to the investors. As I mentioned, the subtotals like operating profits, this will going to change the way you are reporting to the investors, so you need to have a discussion with them as well. And also, if your IFRS 18, or we can say the disaggregations, or if you have an, forex gain or losses, if those are changing, you need to check whether your systems are enabled to get you that breakdown for reporting purpose. And the local reporting landscape has to be considered as well. Now, if I just want to give a quick comparison between IAS 1 and IFRS 18. So IFRS 1, right, of course the title has changed. The focus was more general guidance, and here it will be more enhanced structured, right? So if you see that financial statements or income statements and the disclosure note, it will be more enhanced structure. And the profit and loss, which was more flexible before, right, it will be more mandatory categories will be there. And as I mentioned, there are 5 categories. One is operating, second one is investing, third one is financing, and the income tax and discontinued operations. So these are the 5 categories which you're going to see in 2027 onwards. And most important is there was no subtotal for operating profits. In IFRS 18, you will have a subtotal for operating profits. And MPM, right, we'll discuss in detail. This is a new concept. It was never there. So in simple terms, if management is showing any sort of management performance metrics anywhere, in the investors' reportings, they'll have to now capture the basis in your notes to the accounts. We'll discuss in that detail. And aggregation and disaggregation, it was more general principles, right? And now here it will be more clear rules, and that's where we are leading for that. To make it more comparable, it has to bring some rules as well. And I see for the fact that there are clients which we are working right now on IFRS 18, there are some accounts, they have been disaggregated and which is actually impacting their system as well. And the expense presentations was, before it was by nature and functions, now it is nature, functions, and mix is allowed. Although when you see that there are some financial statement I see, there is still mix is been taken as an early adoption of IFRS 18. And comparability will be more better and effective date, as you know. Now next is the key changes. If you want to take away key changes, just think of 3 changes most critical in IFRS 18. One is, as I mentioned, more structured income statement. You will have those 5 categories. So the 3 categories are operating, investing, financing, which was never there before. And then you need to assess your main business activity. We'll discuss more on MBA, right? We'll discuss that in the next slides. The second most important is disclosure, and if you are an auditor in the room, you need to audit those disclosures or MPM, right? So this MPM is, we'll keep this for the next slide to understand. And the third most important is greater disaggregations of the informations. And that is where in past, anything which is I don't know goes to others. It will not happen now in IFRS 18 world. Let us discuss that in detail. So the net income statement, right? What is going to change? The 2 new subtotals are added, right? So you have your operating profits and the profit or loss before finance and income tax. These are the 2 new lines you will going to see in your IFRS 18. Next is your 3 categories I mentioned earlier. So if you see there is operating, investing, and financing, you can see that in the purple color. And then you will have profit before tax, which is as normal. And then if you have a discontinued operation, you will have another line item. And this third one, this is one of the most critical as well. All your equity accounted investees, your investments, which is equity accounted, your associates, investment associate, joint venture, or unconsolidated subsidiaries, those needs to be shown under your investing activity. So no more this is shown in the operating. So you can imagine if your management was looking at the operating profit before, and now after IFRS 18, they'll see there is a significant change. So of course, if you are doing an early discussion on IFRS 18, you can realign the KPIs as well. So most important thing, which is we'll discuss about specified main business activities in the next slide. This is more on companies who has investments, or the company banks, which is basically have loans to the customers, or companies who has an investment assets like a real estate. We'll discuss that, and it will have more critical impact on this, and we're going to understand how this will going to have a critical impact. One important thing, operating, investing, financing, in your income statement, don't get confused with your cash flow. Those are nothing to do with each other, they are completely different. It might happen, it might be same for some of them, but not necessarily everything will be same. Clear? Okay, so if I want to classify three aspects, which is operating. Now, any income expenses which is from your main business activity, MBA, we'll learn the abbreviation, we like as a consultant abbreviations. MBA, you need to consider all this company's operations, which is their main business activity, under operating. One more thing, operating is a residual, we can say, category as well. If nothing goes to your financing or investing, it also sits under operating. Then the second one is investing. So as I mentioned earlier, investment in associates, joint venture, unconsolidated subsidiaries, your cash and cash equivalents, your fixed deposit, interest, everything will come here. An asset that generates a return individually and largely independently. So if a company has investments in a property, but that is not their MBA, right? That will actually sit under investing category, not in the operating. Okay? And the third is the financing, which is anything interest expenses you're paying for your loans, or any interest which is unwinding of your, say, lease liabilities, or any other unwinding will actually sit under the financing activity. Now, as I mentioned to you, specified main business activity, this is SMBA. Learn this abbreviation. So if you go out and talk about this abbreviation, people will understand IFRS 18. So SMBA is mainly the companies which are having investments in assets, like a real estate company, right? They have the investment assets and they get a rental income. If they have that business, or if it is a bank who is actually financing to a customer. And it's not just a bank, it could be a company as well who has a financing activity as a part of that. We'll discuss that in detail. In those cases, SMBA, your income, which actually from interest or from your rental returns from your properties, will go to your operating. It will not going to sit in your investing and financing activity. Clear? SMBA is very specific for companies who has investments in properties, or somebody who has actually funded to a customer. And this will going to, you can imagine the shift if you have a groups and all that. We'll discuss that in the next slide. groups will have a significant impact, and you have to work on IFRS 18 now. Now, operating expenses presentation. One important thing is, before you could have put your operating expenses analysis, the breakdown, directly in your notes. Now IFRS 18 discourages that practice. You need to bring your analysis, the breakdown of your operating expenses in your income statement, right? And secondly is the way you need to have either nature functions or mixed presentation is not a choice for you. It's not a choice. It depends on which sort of a representation will give a most useful structure for you. In that case, if your industry practice is to show financial statement by function, you individually can't go and change that as a nature. Or anything which you're doing consistently, you can't go and change every year, right? So this is not a choice. This depends on the industry practice, I can say in simple words. So income statement, either by functions like your revenue, cost of goods sold, gross profit, which remains as it is, your R&D expenses, right, research and development department expenses, or your admin expenses. These are the functions of the organization, and that you combine together will actually be more on a functions. When you put on nature, you will have your revenue, cost of material, depreciations, and transport costs, similar like that. These are more from the nature of your expenses. And the third, which I mentioned earlier, mix is allowed, right? Before it was not there, but now mix is also allowed. So you may have some of the nature, like impairment expenses, part of your income statement. Now, if you are following by function, right? If the company is following by function, you need to disclose the cost of sales. That is important to disclose on your income statement. I'm sure most of the companies are doing right now, but there might be some exceptions. But they have to bring this cost of sales line items in your income statement. Plus, you have to disclose qualitative informations related to your expenses booked in your P&L. So whatever functional line you have it, you need to have a qualitative disclosures. And most important new thing which they have added is one single note. When you are representing functional representation of your income statement, you need one single note which has 5 nature operating expenses. So this is something new you're going to see in the future. So your operating expenses by nature, you put it depreciations, amortizations, employee benefits, impairment losses, inventory write-off. These are the only 5 categories. You can't just change that as per your wish. These are the 5 categories specified in IFRS 18. You need to put those, and then by functions, you'll have to allocate those numbers, right? Not necessary that the total numbers will tie up. Say example, the depreciation is your 72 and your operating, the cost is 68. It may not necessarily going to tie up because there may be some depreciation which might have capitalized or something must have been shown as investment activity. This disclosure is only for operating expenses. Clear? One quick test. IFRS 18 requires you under functional method to disclose the numerical breakdown of admin expenses. What is your thought? So you have seen the current financial, right? Every financial you have a breakdown of admin expenses, staff costs, whatever, so on and so forth. Now whether IFRS 18 requires you to have that disclosures going forward, the numerical disclosure. In IFRS, I like it depends. If you don't know anything, it depends. But one thing is changing in IFRS 18 is if you say it depends, you need to have a disclosure note for that. Sorry, I've been given 45 minutes. I'll try to cover whatever I can, but let me get some more time if required, yeah? Now, I can see there are 21 people says it depends, some people says no, and some people say yes. And says 75 people says yes out of 121. What do you think? Can you move to the slide? So answer is no. Now you may think that, okay, to give more information to my user, to give everything. You can write a whole thesis on your expenses, but IFRS 18 don't require you to give numerical breakdown. What you need to do is you need to explain those numbers, functional expenses, what you're shown in the income statement. Just have a qualitative disclosures. So if you see my previous slide, it says disclose a qualitative description only. It doesn't say quantitative. Okay, next one, I'll skip this because of time, but the next one is more on financing activity. So example, if you have an interest expenses, right, where it will going to sit? It will show in the financing activity. If you have a loan processing fees, right, this also going to see in the financing activity. Now if you have a SWIFT charges, and that's where the IFRS requires you to rethink whether your chart of account needs to be changed. So if you are including all your bank charges and SWIFT charges in your one account, you actually need to change because SWIFT charges will go to the operating. And similarly, payment gateway charges will go to your operating, and LC charges will, it depends. If the LCs are used for the operation purpose, right, this will go to your operations. If it is used for any other purpose, or if it is for the financing purpose, it actually goes to the financing activity. So example, if they have taken an LC for buying any asset which is not used for the business purpose, it may go to the financing. So you need to think whether your chart of accounts are aligned to make sure that you have a proper disclosures when your IFRS 18 is implemented. As I mentioned, abbreviations, we love abbreviations. MBA, MPM, right? These are not professional degrees. MBA, main business activity. Now, if you want to show anything in the operating activity, you need to understand what is your main business activity. Now, main business activity, once again, as an auditor, you may think, oh, I'll see their trade license and I'll decide what is their main business activity. But it's not. You need to consider how the managements are reporting internally their numbers and what they are showing as an operating. And that is how you're going to decide what is their main business activity. Say example, if there is a manufacturing of goods, interest expenses, borrowing will go to the finance, gain and losses on investment property, which is not their main business activity, goes to the investing. And if it is a manufacturing, and they also have financing. Say example, you are an Alfote Motors, right? They sometimes give financing as well. In those cases, it goes to the operating, the interest expense on borrowing goes to the operating, and it applies same for the finance to the customer as well. It goes to the operating, and for any other loans which they have taken not for funding to the customer, that has a choice. You can actually take to operating or financing, right? This choice is only for company whose main business is to give a funding to the customer, not for others. And similarly, if you have investment property, as I mentioned, loss or gain on investment properties will actually go to the operating. Clear? Now, let me take this example. This is more for the group consolidation. And people who are actually responsible for group consolidation, very important to understand that you need to assess the main business activity for individual subsidiary level as well as a group level, right? And this is one of the example you'll see. If company has manufacturing as a subsidiary, it has a private equity, and then it has a bank which actually fund to A and B. They don't have any funding to the third party. Now, if these are the numbers, what will happen is in your consolidation, your 15 million goes up, eliminations in the consolidation, and this 10 million, which for company B was operating activity, in your consolidation, this will go to your financing activity. So you need to see each and every numbers in your group entities and decide what is your MBA, and accordingly your group consolidation will change. Okay, MPM. So management performance measurement, right? These are purely where companies are disclosing various numbers, right, to the investors. And those numbers actually gives indications of the financial performance. It could be just adjusted EBITDA, or it is adjusted gross profit, right? Where they may actually exclude exceptional cost. This all has to be now disclosed in the notes to the account, right? And one good thing is you don't have to disclose like customer satisfaction statistics. It should be more of a financial performance, and it should be having some, if it is not a subtotal of income statement, no need to disclose that. And third is, if it is like say gross profit, which is anyway required by standard, that is not an MPA. Clear? So MPA is something which you need to disclose in the finance statement, and as auditors, as I mentioned, you have to audit that as well. I'll just take an example quickly for this. So MPA, like say adjusted gross or operating profits, you need to adjust if say restructuring cost has been removed, and then you have to connect those numbers with the subtotal of your financial statement. So your operating profit in your financial statement should tie up with your adjustments which you are doing after taking different kind of expenses which you are removing when you are disclosing the adjusted operating profits. Now, one thing which I just wanted to discuss is an investor's ratios, right, which actually derive after doing an adjustments in the profit numbers, right? Whether those investment ratios or the ratio which has been disclosed to the shareholders, and they not disclose the individual numbers itself, whether that could be an MPM. This has some debates actually still going on, but as per ISB, if company is disclosing only ratios and they're using the adjusted profits numbers, or denominator or numerator is adjusted numbers, that is still an MPM, and you need to have a disclosure for that as well, right? Very important, because you may think that, okay, if there is any line items in your income statement, only that is your MPM, but in this case, where you're not showing the line item, but you're just giving the ratios to the investors. Okay, can you move to the slides, please? Sorry, I'm not taking this polling question. So other key impacts, if I talk about aggregations and disaggregations, one of the important aspects is to have a structured presentations, you need to disaggregate. Now, you may have, subtotals like others and all that. So if you have an others and that number is significant, please make sure that you revisit what is there in those breakdowns. And even for any numbers which has been included in admin expenses, it is not an admin expenses, you need to see that nature of that and then disaggregate that number as well from the income statement. And especially others are discouraged. You may have small others, but other income, other expenses, other operating, or even other liabilities, everything has to be removed from your balance sheet and the income statement. These are more on the nature which I already discussed. Now, foreign exchange gain and losses, very important. This needs to be shown under either operating, financing or investing depends on what was that purpose and from where this is foreign exchange gain is coming. Only one exception is if it is, company has to pay undue cost or efforts are required, they may actually treat this as an operating. But otherwise, you'll have to show this into trading, investing, and if it is a financing, you need to show there. This is very important because you may have to change your systems because of this, because if numbers are directly captured through your systems, you might have to think through whether your system is required to be changed. One more, derivative instruments. If you have a derivative instruments, again, you'll have to classify that based on what was the nature of company's main business activity, and secondly, what is the purpose of holding those derivatives, and third is relationship with underlying transactions. So if that underlying risk you need to consider, say example, if you're taken and swap, right, interest rate swap, now that is covering your finance risk, right? That will actually sit under the financing. If you are covering your hedging your commodity, and this is specifically for buying and selling of your commodity, those risks can be captured directly in the operating. I'll skip this polling questions again. The next is cash flow statement. The only change in the cash flow statement is you will start with operating profit in the cash flow statement. And now all your dividend and interest, there is no option of showing that in the operating. It will be part of the financing, or it will be the, the investing. Balance sheet, one change, good news. Only thing is the goodwill now always has to be shown on the face of the balance sheet. As I mentioned, if there are any disaggregations, that needs to be required to be done in the balance sheet as well. Okay, now practical implications and challenges. Now, one thing, as I mentioned, you need to sit with your system guys and understand, is there anything where for the classification purpose, you need to understand that systems has to be changed. If there is any gaps in your systems, you need to actually go and fix those as well, right? This is something which not very big for the small organization, but if you are a large organization and you have those impacts which we discussed earlier, you need to do that changes as well. Now, what I see from our practical discussion what we are having right now, because there are a lot of big companies, they have started with their IFRS 18 journey. One is the chart of accounts are changing, right? And that is basically, you need to sit and then also see the mapping of your chart of accounts with your financial statements. Comparative numbers has to be changed, so you need to start thinking now if you have to get something changed in your system, because later on you will not be able to get that information as well. MPM is a new, so you need to have a governance, you need to have an approval process for that, need to decide what other MPMs you're already disclosing to others. Consolidation and group reporting channels. So this the consolidations company where you're doing consolidation, you need to think through whether your subsidiary's reporting pack needs to be changed, right? And you need to give some trainings to your subsidiary people as well. Internal controls and audit readiness. So you need to have proper controls on approving what is that MPM is, what is that disaggregation. It can't be just an finance accountant is sitting and deciding on those. There has to be proper approval process. Materiality is most important, because anything which is material, you need to disaggregate that. So you need to understand what is your materiality first of all, and what is that number which is material for the organization. And disaggregation and disclosures are most critical. You need to think through what needs to be changed in your financial statements. Budgetary and management reporting alignment, this is more for if you are having a budgeting numbers which are not aligned to your financial statement right now, or going forward there will be change in the operating results and all that, you need to align those things together. And board, please go and discuss with the board if your numbers, operating profits are changing. And KPI stakeholders, because those numbers, if you need to change now, you can sit together with the boards and change it. And treasury, if you have different instruments, you need to discuss with the treasury to get those information for preparing the financial statement. So with this, I'll just put some questions for the CFOs, that if you go on Monday, please ask your team. These are the specific questions for that. With that, I know I have taken 1 minute more. Thank you very much.
Thank you, Firoz. I think as chartered accountants, our learning is never going to stop. And what a fantastic session. He has given perspective of every segment of the balance sheet. I would like to invite our chairman, vice chairman, Dikshit Jain, and we also have CLA Emirates team today here, Mr. Manu and Ajit Kumar. Please do join us for the felicitation of our speaker, Firoz. Manu always comes up with these unique books for us, and today he has the unveiling of his new book on free zones. Please scan the QR code for the details of the book and you will have it. Can we have, please on the stage. Please. Complexities of free zones are going to be easy with this book. Thank you, Firoz. Coming on to the last segment of the day, IFRS and the panel. I think with IFRS 18 itself, we know now how much we have to work further. Today, we have a strong panelist, but to drive the panel, we have someone very important with us. I would like to invite our moderator, CA Nitin Hyundai, to please come on stage. Please keep cheering, guys. This is the last section, and if you really want to learn, you have to keep cheering. So please welcome CA Nitin. Please, sir, could you please occupy your seat? I would also like to invite Mr. Prijumon Dominic to please come on the stage as the panelist. Please join us, Dominic. I would also like to invite Mr. Navneet Lalani. Yes, the DFSA authority here with us. He's a director there. Please come on the stage, sir. CA Manoj Khatod, the Group CFO of Sharaf Group. Welcome, Manoj. Cheering. I'm not touching. Mr. Yusuf Hassan, the Senior Vice President, ADNOC Group. It is definitely going to be an insightful panel. Thank you very much. Over to you, Nitin, now.
So I was just saying thank you to the ICI Dubai for organizing today's event and bringing together such a nice panel. It's very diversified, and some of them are really, everybody will be aware that there are some from the regulator, from the auditor, as well as the different aspect of the industry. So we had a nice session with Firoz just before this, where we have learned in detail about IFRS 18. So now it's the time that we also go through the practical aspect of it, although Firoz also highlighted some of the practical aspect in his presentation. But however, it will always be good to hear directly from the horse's mouth. So we'll listen directly from the panel. Before we start this, so we'll have this another, around, we originally planned 15 minutes, but we'll try to reduce it to a bit, knowing that it's a last session in the first half. So we'll start this session with the audience poll, quick one. Thereafter, we'll have a discussion with the panel. And in between, we'll try to have some time for the audience poll, audience question, if anybody has any question from the audience. And then finally, we conclude the session. So that's how we plan. So with that, I think we'll start with the audience poll first. Yeah? So, question is, one word, if we have to give, how we'll describe the IFRS 18, what will be that one word? So I can see transparency is in the center, disclosure, investor friendly. Somebody has written simplified. Oh. Clear presentation, okay, nice. Comprehensive. Okay, so I think 28 of 38 reported, so I think, so we have, more or less sort of, okay, so we are getting clear presentation as well now, comprehensive, transparent. Okay, so we can see that there's a good amount of clarity among the audience on this. So let's, go ahead and discuss with the panel now. So thank you, panel, for coming here and taking out your esteemed time here. So we will start with the Dominic first. Dominic. So IFRS 18, how do you describe it? Is it just merely a presentation change, or it is a significant change in the recently issued IFRSs?
Thank you for the question, Nitin. In my opinion, IFRS 18 it's legally a presentation and disclosure standard. However, both commercially and economically, it's much broader and larger than just a formatting exercise. So it's creating a new architecture of communicating the performance. So I would like to quickly make like 3 layers. Like, one is the structural discipline which is going to create. Second would be the management accountability perspective. And because of this above 2, I think it's going to give a much quality information to the investors and the users of the audited financial statements.
Okay, so you believe that it's a really a good presentation. It's a major change in the accounting standard as well as.
Definitely, it's a major. I mean, if you have to just quickly go before 80s, the audit was purely to show that the shareholders' funds are being utilized effectively. From 80 to 2000, let's say, it shows like it became more investor friendly, or it became more forward looking. From 2000 to 2020, we see a lot of IFRS standards like IFRS 9 or 13, 15, 16, all are about measurements, yeah? So after that, ISB must have recognized that even if you are giving the best numbers, unless it is communicated effectively, it still results in a poor kind of financial reporting. So I would say now this is the era of communication where IFRS 18 is going to augment a better presentation and a better and a meaningful decision-making by the investors.
Thank you. What is your view, Mr. Naveed?
Thank you, Nitin. And to start with, many thanks to ICAI and Chairman Rishi for inviting me. A regulator cannot start without saying the disclaimer which Talal also gave you. Views are my own and not that of the DFSA or any other international organization I belong to. Nitin, I think it's a bit of both. It's a change, as Dominic mentioned, is a different architecture. And the most important thing is the auditing MPMs. And Firoz was trying to help us understand more on that. But we need to realize that it's also a presentation side change because the measurement and recognition has not changed.
Yeah.
All those elements still stay the same. If there was any change in the measurement or the recognition, then we would be talking about more on the structural side. But it's a change in the presentation, but the auditing MPM is probably will be a game changer for the investors, for the regulators, especially those investors who rely on a general purpose financial statement who do not have the ability to ask more questions. That will help them understand the business and the value the business brings to the investors.
Yeah, I fully agree with you that the standard IFRS 18 is specially meant for the investor perspective who are being long demanding to restructure the way the income statement is presented. Hi, Mr. Manoj, what are your views on it?
Thank you, Nitin, and good morning to everybody, or good afternoon already probably. And this is not a nice time to be in the session when you are already looking forward to the lunch. But I think if you look at any of these standards, IFRS, I think the core is transparency, and I think that's what everybody in the poll also suggested. And the idea is, how do you bring the comparison between different organizations on a single benchmark? It's not that easy, but as we keep adopting, and those who are my colleagues from the profession, when all started with first Indian accounting standard, international accounting standard, then the GAP, and now IFRS, they will see that the primary objective of IFRS is bringing in transparency and standardization in the comparison and reporting. And if we keep that part in mind, I think it will not be a massive ask. Yes, it will depend on what kind of organization you are, whether you are a group or you are an entity, whether you are listed or you are privately held. Some of these impact will come, but overall, this brings in a lot more transparency about your operation with the stakeholder. So that's what I see in this particular one.
Thank you, thank you. Yusuf, what are your views?
Yeah. So Nitin, that's an interesting question. Half my life, or most of my life, I was a consultant, and I've now moved into practice. As a consultant, my eyes light up whenever there's a new accounting standard. Any significant change, I want to exemplify it, I want to make it big, I want to see it as an opportunity to do a transformation. When I look at it simplistically, as an accountant, as a CFO, I think of it purely as presentation. I think the right answer sits somewhere in between. And I think the mistake many people do in an IFRS presentation is cover the technicalities without looking at implications. Now, I'm using the concept of grandmother, which the secretary brings up. I mean, when I've been in the consulting world, I've done major implementations on all the major standards in the UAE. And you got to look, when I looked at the standard and approached it from a business commercial perspective, I tried to frame it in that mindset. So think of IFRS 9. This had to transform the way the back office of banks calculates provisions. IFRS 10 was a massive implication on the funds industry, how to GP/LP works. You had to focus on that, relook at governance, relook at deadlock provisions, relook at matters like that. IFRS 15, we focused on real estate. We had to look at the real estate revenue recognition patterns. We created discipline in contracting, because IFRS 15 is about revenue from contracts with customers. We had to relook at loyalty programs completely. And we also had to look at a different way of splitting up provisions and bundles, right? So this was one thing in 15. 16, very important for us in covenants. We had to look at loan covenants. We started paying attention to lease terms. Many companies didn't have a lease repository, etc. 17, critical game changer for insurance industry. When you look at 18 and the opportunities from a consulting perspective first, let's go and sell some chart of account work. Let's go sell some ERP. When I looked at this personally from a business perspective, I looked at my organization and looked at transformative opportunities. I can fix up my chart of accounts. I can bring more transparency. I see far too much aggregation and managing of results. I'll give you one perspective. I dislike MPMs. I'm a traditional accountant. What is an MPM? It's a distraction or a divergence. My profit isn't so good, but hey, look at this number. This is a great number. Give me a bonus. You know, or trying to distract or move attention away from that. So for me, management performance managers is, when I was approaching it from an audit perspective, I didn't like them. So these things, I'm looking at opportunities in my business to rationalize this. Guys, if you want to do this, look here. I'm still interested in profit. Still interested in return on investment, but all these things go away. So back to your question. It's a bit of both. There is a bit of presentation. This is not a massive change. I'm not going to change systems. I'm not going to throw away things. I'm not going to revolutionize the industry. But there are changes. There's things we have to do in 2026. We have to start thinking about it. 2027 is too late. Your interim financials have to pick up the comparative already. You're already in Q2. Q3 is already about to happen. Guys, you don't have your numbers. You're too late. You're too late because this requires a restatement of comparatives, a representation of things. Will things change numerically? Dividends? No. Transparency will increase 150%. And I'll give you some ideas of how that will, when you continue your question.
Thank you, Yusuf. Coming to my next question, what are the implementation challenges which you have faced during your experience in implementing IFRS 18?
Yeah.
What I see essentially, I think the main could be the classification judgment itself. I think, as we mentioned, the main business activity to be identified. Now, having said that, I think over here for many companies after having interacted, I think a delayed implementation is going to be the biggest challenge because they would not be, if someone is looking into at December 2027, they would not have enough or sufficient time to rework on the chart of accounts or to create as many GLs which are required specifically for a forex or related income or expenses. So I personally, my recommendation to anyone who is hearing is early adoption is definitely available. If you don't do early adoption, then as an auditor, specifically if you tell us our systems are not good enough, that may not be a right excuse what we are going to take in the right spirit. We may further push you at that time to manually rework on it, and we may have to wait for it. So I think the best strategy is to adopt it early. And another problem is in 2027, if you just do it, a restatement for 2026, again, will loom larger too. So I would suggest to avoid this, an earlier adoption is the best strategy for successful businesses.
Yeah, I agree fully. Even if there is no early adoption, still people have to still work on 2026 now for the comparatives when actually the standard will be implemented. So, and it will be, I think, probably a better area that they can agree the figures with the auditors in advance so that at least there is no surprise next year. So I think that was also good. Sure. What are your views, Mr. Naveed, on this?
So on the implementation side, the best time to implement when the standard was published in April 2024. The second best time is today. There is no other thought. If you're going to delay it further, you are going to be in a mess. So if I talk about DIFC, the auditors are now prohibited to help CFOs prepare the financial statements. This is in place for a number of years now because we want the CFOs to be competent. So if you are the auditor and you think that you cross-sell, it won't happen. So you have to find, or CFOs will have to find consultants, help them. And at the end of the day, if you are a small size business, if you know your business well, you can do a lot of these changes in-house, to be honest. As Yusuf mentioned, this is not, massive in terms of an IFRS 9 came in place, which asked us to change everything. Here, it's asking you to reshuffle the way you present. Yes, you have to do the ERP work, you have to manage your stakeholders, you have to manage your investors, the investment committees, regulators, the regulatory reporting, the statutory reporting coming in. There are a lot of things, and as Firoz mentioned, it can't be done on a 25, 30-minute coffee break. You need to have a project plan in place. You need to identify the right stakeholders, your treasury, your ERP solutions, your internal controls. Everybody needs to be in the room together to talk about it, but don't delay.
Thank you. Mr. Manoj, what is your experience from being a CFO for a well-diversified group?
So I think on one side I have Naveed, and in front of me is a lot of audience who are in the professional work directly. So what he is essentially telling me is don't talk to your auditor, but appoint an advisor. That's exactly the message I hear from. But I think, see, when you look at any IFRS for that example, if you just keep that in mind, that the purpose is transparency, I think 50% of the battle is won. But if you see specifically IFRS 18, this will bring out some fundamental change in the way your financials are read and the conversation in the boardrooms. So when you are looking at businesses, if you pick up a business, because now the financing activity, which include lease, will be segregated from your operation, suddenly your operating margin for a business which is leveraged would also look as better, if not worse, versus a business which is well capitalized. It suddenly throws out those efficiency on your face, whether you are actually doing well or you are not doing well operationally. Your efficiencies will start coming out.
True.
If your efficiencies start coming out, the management of the business, whether the CEO, the CFO, the operation director, they all will become more answerable to those questions. It's very important for them to understand that impact. The second thing is from the investor point of view. If there are investors, they will question the company management even a bit more transparently. That if your operating margins are dropping, if your capital is there, what is the reason? Comparison becomes much easier. Then if you are looking at the second option of if there is an excessive capital in the business, the investment income will make it more visible to you because your cash balances and your earning from investments are visible. So probably the shareholders would demand more money out of you if you're not able to deploy it. So the whole cycle of performing better, investing better, reporting better, all these three things comes out of this IFRS 18.
Yeah, I fully agree. This reminds me of one of my experience where, an entity in Nigeria where, the currency fluctuates too much in last 2 years. So they were benefiting on the operating side by increasing the price of the goods, but whereas all the losses on the Forex was going below the EBITDA, below the EBIT. So that was where I think under IFRS 18, now you have no more, you cannot escape your loss on foreign exchange and it has to hit your operating profits.
And just to add to that, Nitin, operating out of Middle East, and especially headquartered in Dubai and operating across multiple territories, this becomes one of the key issue of discussion.
Yeah.
And how do you separate your operation versus others?
True, I agree fully. Yusuf, what are your views?
Yeah, interesting. So this is one standard where we have the data. So all other standards, we needed to get data. Critical service margin, interest, leases, we had to go find our lease repositories. We had to reread our contracts. Here we have data. So it's not going together and go and spend money on consultants to go get data for you. You have the data, it's the ability of the or how transparent you want to be. Look, in terms of presentation, there are a few challenges. I'll tell you the few challenges. It's easy. I think it's quite easy. These definitions are not new definitions. Financing activities, anything that affects debt and equity. That's the old cash flow definition. Investing, additions or less disposals of assets are investing activities. Everything else is operating. Halas, end of story. It is not complicated definitions that do this. We're going to be linking the income statement to the cash flow statement better. So not too much of a shift in there. Companies like oil and gas companies where our main business activity is through joint ventures and associates, we have a big problem. Because this is our operating activity, it's our main business activity, it's not going to be in operating income. So this has been a bugbear of some of my CFOs in the group saying, hey, listen, the only way we operate is through joint ventures. And this is a main operating business, and hey, all of a sudden you're putting this below the line. It's fine. I think people who understand the business understand it. So that is an implementation challenge. Presentation is small. Me, my biggest issue, I would say, is standardizing MPMs and over-aggregation. So two challenges I see here is over-aggregation, and I'm sure you'll get to over-aggregation, but this concept of other is a big misnomer. I think I have massive problems. I'll give you some anecdotal evidence on how to resolve this concept of other, which is the biggest impediment to transparency I actually see. So data not an issue. Presentation, it's a small hurdle. The background, we'll have to fix things up. It's not as massive as tax. It's not as massive as VAT. MPMs, we have to align judgments. We have to sort of create a group view. You have to use it. So this is my little imperative or to management. I'm saying if there is a transformation opportunities, let's get MPMs.
Thank you. As you rightly mentioned that one of the major impact is also the equity accounted investee, the share in profit of equity accounted investee, which cannot go to operating now. Just from my information, is it way where we can show, operating profit and share in, we have one line operating profit. Below that, we add share in equity accounted investee, and then we can add operating profit and share in equity accounted investee. If really it's so critical, because I know some of the businesses has a model of getting business through JVs.
Nitin, we follow a standard. If we want to show what we want to, we can create hundreds of MPMs that makes every department look good. Sorry, I think if you want to follow the standard, step one. Everything else we want to do is innovation or something. you want to show something. Look, everybody in the EBITDA was a very sensitive topic before. It was a big sensitive topic in IFRS 16 because you're going to mess up the balance sheet completely, but you're going to get good EBITDA, right? So management are sometimes over-focused on things and want to draw attention of users to other measures that are there. That's not comparability. Because, you see, there's a problem here. Your management performance measures are your management performance measures. The rest of IFRS is IFRS.
Yeah.
So that's comparable. I can compare 50 real estate companies, but if you create a management performance measure that plays around with some number and makes you look better, it's not the idea. That's not the idea. So look, my view is, if you want to do that and show some number from operations, introduce that as a management performance measure. Let's not change the standard. The standard is standard, applies consistently across users.
Thank you. Thank you, Yusuf. I think you brought back the importance of IFRS back on this. So coming on the MPM side, so Dominic, you being the auditor, I have one standard question for you: how to validate MPMs?
Right. That's one of the greatest challenges as auditors, because traditionally we've been looking at numbers which is pretty much prepared under the measurement and recognition rule. But here, when it comes to MPM, again, it's made by the management, obviously for their advantage. So we are trying to validate a management's a projection to a certain extent. So even though MPM is originated from the management's view of its performance, it ends up in the audited financial statement as an audited financial information. So this is where an auditor is also going to be a co-owner in those information. So we have to be extremely, extremely critical in analyzing these MPMs. And what I would suggest, in the interest of time, would be to make like a 6 C's of MPM assurance, where the first C would be about understanding that all MPMs are included, which I call it as the completeness of it. Second, I would say it would be about the calculation. How did they calculate this? Is it correct? Because it's going to be presented across to the investors. The third, what I would state, is about the consistency. Because how consistent are they in using and calculating these MPMs? Because that's going to be extremely tricky with investors. The fourth one, I would say, is about the classification itself. Have they properly classified and then came to this particular number? The fifth, I would say, is the communication. Because end of the day, the description, what they're going to give inside the audited financial report, and what they're communicating out to the public, are they at par? That's the fifth thing what we would be checking. And not the least, but the sixth would be the comparability aspect of it. Is it going to mislead by creating a certain MPM? Is it going to mislead when they're comparing with another entity? So I would say roughly, if you put these 6 C's of MPM assurance, as an auditor, pretty much should be able to cover the kind of risk what it is bringing in.
Thank you. I think you have very lightly summarized into the C's, so it's easy to remember. Mr. Navid, what are your views? I will give, what are the red flags you believe in the MPM disclosures, and what will be the regulator target when they will see the MPMs of the listed companies?
Sure. So MPMs are yet to come, so there will be a lot of creativity coming in from the firms, as again, Yusuf and Dominic both mentioned about it. The red flags which, as a regulator and as auditor, you should be looking at is the non-recurring adjustments which never stops. A one-off adjustment which keep coming every year, year on year, quarter on quarter. And if it doesn't stop, that means that that's the business model, that's how the firms are operating. Cherry picking of the adjustments by the management, not bringing every single relevant adjustments into it. Not aligning with the subtotals of IFRS 18. So when you are doing things, it does not align well. Very vague definitions, labels, innovative terms which are not really industry practice. When you use a particular word and you realize that management has redefined that word, which is not an industry norm, to get a better results for themselves. And finally, missing the tax effects. Because tax is now coming into the UAE. In the past, we would not bother about the tax elements that much unless you have an international group consolidation work happening. But now it's very relevant, and FTA would also be looking at that with great interest.
Thank you. Thank you. Mr. Manoj, being from, I would like what are the most challenging aspects in implementing IFRS 18 across a privately held diversified group as yours?
Nitin, I think a lot of this will require communication. I'll give you a very simple example. So today, a lot of conversation in many businesses are based on gross margins, which will now change to operating profit. And
Yes.
suddenly there will be a lot of conversation about the capital adequacy, the capital structure of the balance sheet, about the performance of the particular management team of a particular business. There will be a comparison between a capital intensive business versus a service business. So these questions will come in, and a lot of effort has to go from CFO side to make sure that there is an alignment. You bring in one management performance indicator so that this all coined up. Because ultimately the main challenge will come when you start putting this together in a consolidation phase. So yes, communication and agreement and having people understand the reason behind the change. I think that itself will take care of a lot of these challenges.
Thank you. Yusuf, something on other expenses, which historically being called as the black box of the financial accounting. So now the new IFRS 18 specifically require that it actually bars client to bury large unspecified large amount in other expenses.
Mm-hmm.
Do you think it will require the management to relook into the mapping and the chart of accounts and all, and there will be a lot of pressure on management to revisit all of them, which were historically been agreed?
Absolutely, and that's a good thing. I mean, the problem is management has the information. They have the granularity of the information that is included in other. They simply choose not to disclose it. I'll give you a simple example. A company may have increased its expenses from $1 billion to $2.2 billion. In the notes to the financial statements in that other expenses line, you'll have stationary 200,000, other 2 billion. So that's irrelevant information. But it may be relevant for management. They want to show, hey, look at how low our stationary cost has gone because of going paperless. The problem or the bigger issue is that there's a whole lot of $1 billion of expenses, information lost in that other category. This is far too common. People use that column, that other, not because they don't know, not because of materiality, because they don't want to show weaknesses in performance. So for me, the transparency point comes out again. It's not the lack of information. See, let me explain to you something. There's a concept of materiality. People say, oh, Yusuf, what about materiality? Immaterial. Materiality from an accountant's perspective is something of which the omission or misstatement would affect the decision of users. The fact that you've chosen to put it as other means it has importance. For me, the quantum, sheer quantum, and the fact that you haven't disaggregated points to another underlying problem. So that would make me more worried of management if they lack transparency.
Thank you. Thank you. Just want to check, we have time for the public question or we skip? Yeah, I think probably one question.
I'm from the bank and we analyze the financial statement day and out. Now for the corporate, what incentives they have if their other charges and all are going in the operating, so that will reduce the operating profit and it will reduce the EBITDA. So for comparison, where we have given already the projections to the banks, the EBITDA will go haywire and the reconciliation will become equally difficult for banks to know what exactly the cash generation or the EBITDA is. What is your thoughts on that?
So, Mr. Manoj, you would like to address this?
See, I think we discussed about ultimately the numbers are not changing. So it is about recalibrating the numbers in EBITDA, adjusted EBITDA versus what will be the operating profit. So if I look at it from the bank's perspective, if the transparency come in, the leverage data, the cash availability will be much more clearer to the banks now with IFRS 18. So if you have the information about margins and the EBITDA and the information related to operating, financing, and other activities are clearer, yes, there will be some work required. It will not be straightforward because today a lot of businesses classify the depreciation especially or the lease cost as a part of cost of goods sold, let's say logistic. And suddenly you start seeing, okay, how do you segregate it? Employee cost in, let us say, some of the business, one of our business, which is shipping, goes as a part of operation, but it need to be segregated. But ultimately, it will be a EBITDA reconciliation for the bank, which is what I see today. And that will become more transparent for you. But one important aspect which is getting discarded, what Firoz says, was a free cash flow. I believe big time into that particular one indicator because that tells you the health of the organization. So I always push all the business unit heads about what free cash flow you're generating and how are you investing. So that part will become probably a casualty of this change. See, if you see today, and I'm being very honest, the businesses today, the internal discussions are never based on IFRS. Yeah, the internal discussions are always driven by margins. Now, if you realign the margin definition internally, I think the rest of the work of talking to the banks will be left on the finance heads, that to talk to the bank and convince them what we are doing. And that's what will happen. But I think if you see just one change, for me, what is basically coming out in open is that if your capital adequacy and if your capital deployment is not proper, your balance sheet will very clearly reflect that. And that is what banks will draw a lot of comfort from.
Thank you. Thank you. Thank you, all the panel members. Okay.
So only if we have time.
It's okay, I think we'll take it.
So I have a question that I work for a group of companies. So we have very diversified companies within the group. Few companies are in construction, few are in logistics, few are in electronics, and etc. So the materiality and the ratios, what is important for each company is different. So today we have common chart of account, and then we classify based on one rule, that which will go in cost of sale, operating, etc., etc. So now is it going to change for each company? So we will have a different chart of account and different expense will go differently in operating and financing and investing based on that particular company which the good friend Firoz has said. So, or it will be the same like one chart of account for all the companies. So I just want to understand this clearly.
So I would like, Yusuf, you would like to address this?
Yeah, no problem. I don't think there's going to be a fundamental change in your chart of accounts. The business activities remain the business activities. What you have to remember is when you consolidate, the individual identities of those companies disappear. It is a business. That business could have been different subsidiaries or that. Operating is clearly defined. It's defined as the main income generating and everything that is not investing and financing. Khalas, it's an easy definition. Investing and financing, regardless of the business, remains investing and financing. What Firoz laid interest to is if you have a group that has real estate and a bank in it, the bank's loans are its main activity. But then on the other side, it's a lending activity, it's a financing activity. Fortunately, those matters get eliminated on consolidation. In a group situation, those funnies can get eliminated. I would retain the chart of accounts, do some alignment, re-look at those three headings. The income statement needs those three headings. I think in your situation, you might need a mixed approach because in some business, gross profit is relevant. In a service business, it's not relevant. You know, if you're selling goods and products, I want to know margin. And sometimes people will choose not to show margin because they don't want the competitor to know. That's wrong. So if you've got to look at your intention. So come back to your question. Chart of accounts align, not change. The business is the business. Business drives accounting, not the other way around, right? drive change, look, understand your major businesses, understand the eliminations, and at the consolidated level, what is the message you want to say? Investors in this business are aware of the diversity of the businesses you have engaged in. They understand it. They understand that this is the total pool of assets and this is the money available for the shareholder at the end. That will be their key critical point. Showing them operating, investing, financing, they'll get better information from a segment. They can get better information from that. So who am I presenting to? This will be important. So I don't think there's going to be a massive change. But yes, big groups, there may be some analysis required on that.
Before Firoz, I will give you. But one thing is that there cannot be a one set of chart of account. Because what the real estate company, which is building a tower of $10 million, is very different than the logistic. So where the investment and the income, and if you have a renting business in the real estate, that will come differently.
No, but Naveen, sir, that's the same problem with every IFRS. You can't say, oh, look, that is why we currently only have one IFRS 15, revenue from contracts with customers, regardless of which industry you're in. So it doesn't mean this, look, those individual chart of accounts and revenues and those contracts that are drafted for real estate is very different to a contract drafted for logistics. The risks and rewards, the recognition pattern is different. The chart of accounts must identify revenue separately from a logistics business versus a real estate business. It must. Otherwise, I'm not doing enough basic financial control. So those chart of accounts distinctions are there. We're not asking for a universal revenue line. No. Listen, so the sub-aggregation of your information remains intact. How you manage the business, keep it. What's happening is collecting that data, pushing it together into that final TB requires a little bit of care and thought in it. So this is where it changes a little bit. Okay.
So just want to add what Yusuf said, I agree with him. See, one thing which is most important, critical is when you are looking at your MBA, right, at the individual company level, it might be different than at the group level. So at the group level, you need to consider as a group as a whole, right? And not just that you have 20 subsidiaries and everybody has their MBA, you will just take everything in operating. You need to see on the group whether a particular subsidiary, that particular activity, when you are reporting at the group level, whether they have to consider as an other income or it is considered as a part of the revenue. If it is actually part of the revenue, this all comes under operating. If it was never been shown as a part of the revenue, it was shown as other income, you might have to think whether this has to be shown as a financing or operating or investing activity.
Thank you. Thank you.
Yeah, exactly.
Thank you, Firoz, and thank you, Naveen, for a very practical question you raised. With that, I think we will conclude today's session. Thank you, all the panelists, for your esteemed time. And thank you, ICI Dubai, for this nice presentation.
Hello. Yeah, thank you so much, especially the members for patiently listening. Yes, we did overshoot a little bit today. Apologies for that. But a very big round of applause for the moderator and the panelists today. Hats off to them. I now invite our chairman, vice chairman, Naveenji, please join us, and Daya Bhai, please join us on the stage to felicitate our moderator and panelists. XCOM, you can join, please. I request our XCOM Ugamurthy to formally give us the vote of thanks today. You have to, whoever is in the room, need to patiently listen.
Thank you, ma'am. Dear speakers, moderators, and my dear IFRS family, Vanakkam and good afternoon. They say IFRS is like a Dubai traffic. Everyone has an opinion, no one knows full exit. But with the right GPS, I mean the right speaker, we reach the destination. Today, our esteemed speakers took us from IAS 1 to IFRS 18. Sir, you turned debit-credit confusion into clear conclusion. You made impairment feel less painful. You made fair value sound fairly affordable. You are truly going concern for our learning. To our fantastic moderators, you are the air traffic controller of this session. You managed time, managed mics, and managed that one person with more questions. Without you, the event would have got a qualified opinion. On behalf of ICA Dubai chapter, I thank our speakers for sharing knowledge, moderators for monitoring and controlling, for Manikandan for creating the memories from say cheese to say IFRS. You captured every smile, every nod, and every Yanakku Puriyala face too. Because of you, even our statement of cash flows look good on Instagram. And big thank you for our wonderful audience for giving your valuable time for us. Special thanks to our former President ICA India, CA Sunil Talatiji and Aniket Talatiji, and our Central Council member, Dayanis Sarmaji. Let's end with standard of gratitude, SG number 1. Recognize all efforts immediately in the P&L of our hearts. Thank you. Happy weekend. I am happy today, a lot of audience.